Folks, I think we had a good start. Now we will change gears. We took one technical problem, and we spoke about scalability. Now we'll switch gears more towards the business side of things. I want a TokenExpo to be geared more towards the business audience. There's a lot of technical content out there, but not a whole lot about talk about real use cases, right? And some of the key areas of tokenization in real estate, in capital markets, in energy trading. We are not covering professional sports in today's edition, but in the near future, I would like to cover professional sports. I'm a huge sports fanatic, and I think there's a lot going on with blockchain in improving the fan experience, etc. But enough of that. I'm looking forward now to bringing up the next speaker. Has a great background in the mortgage industry. Back in the day, he was an executive at Countrywide, which many of you know was probably the biggest originator of mortgages in the US, got acquired by Bank of America. He's a serial entrepreneur. He's built fintech companies and makes a lot of contributions to the Hyperledger community. He heads the mortgage special interest group, which is under the capital markets special interest group of Hyperledger. And he also runs Zventus, a blockchain consulting and services company. They cater to over half a dozen industry verticals in the work that they do. Marvin, it's great to have you here to do a talk on the state of affairs in the mortgage industry. So I'd like to turn it over to you.
Great. Thank you for having me. Definitely appreciate you including me in this agenda. Now, the real test of my technical skills, let's see if I can go ahead and share the presentation that I have set up.
Okay. Yes, you can see your screen, Marvin.
Okay, great. So let me go into slide share mode.
Perfect.
Okay, so again, thank you for having me. Definitely appreciate being part of this agenda. Here's our agenda for today. I'm just going to do a very brief explanation of tokenization. I think this is a very educated group, so I'm not going to dive too much into that. I'm going to spend a bit more time on why tokenization matters, and then we'll do a deep dive into tokenization within the mortgage industry, talk about some use cases, companies within the mortgage industry that offer some flavor of tokenization, how to tokenize a real estate asset, and then limitations and benefits of tokenization. So really briefly, as Tanvir said, I'm the CTO of Zventus, a global fintech solutions provider. I'm also a member of the Hyperledger Foundation, specifically the co-chairman of the capital markets / financial markets special interest group, specifically the mortgage industry subgroup. Our goal is to educate, research, and deploy blockchain technology solutions for the global mortgage markets. We'll come back to a little bit more on Hyperledger later on. Okay, what is tokenization and why should I care? As I said, I'm not going to spend a whole lot of time defining or explaining what tokenization is, other than giving you the following definition. Tokenization is a process of integrating real-world assets with on-chain economies by allocating them unique, digitally recorded, and transferable rights that can be easily audited or tracked to view changes in ownership over time. Granted, that's a mouthful. I'm sure there are much more encompassing and better definitions, but I just want to level set everyone. If you want more detail on the definitions of tokenization, definitely contact me directly and I can go to as much detail as you'd like. Now, what real estate can be tokenized? The types of real property involved can vary widely, including single-family homes, multifamily structures, office buildings, retail spaces, and everything in between. Now, why should I care about tokenization? Larry Fink, CEO of BlackRock, said in March that, quote, the next generation for markets, the next generation for securities will be tokenization of securities. BlackRock had, at that point, 8.5 trillion assets under management. That's trillion with a T. as of 2022. And while that all won't be tokenized, even just 0.1% of that amount for tokenization would make a whopping 850 million. So almost $1 billion just for BlackRock alone. Similarly, Tyrone Lobban, head of blockchain at JP Morgan's Onyx, last year shared the bank's plan to implement institutional grade DeFi, saying he believes there's significant value for tokenization of assets waiting on the sidelines. So here's his quote. Over time, we think of tokenizing US treasuries or money market fund shares, for example, means these could potentially be used as collateral in DeFi pools. The overall goal is to bring these trillions, again, trillions of dollars of assets into DeFi so that we can use these new mechanisms for trading, borrowing, and lending, but with the scale of institutional assets. So despite these strong endorsements, real estate tokenization is still admittedly, and especially within the mortgage industry, in its infancy. The market is growing at 19.8% compounded annual growth rate. I think the previous speaker had quoted BCG, the Boston Consulting Group, predicting that the tokenization market will balloon to $16 trillion by 2030. They also said that $3.2 trillion of home equity will be held in tokens again by 2030. So if you're still wondering why you should care about tokenization, and you probably do since you're listening to me on this webinar, quite simply, a lot of smart people are saying that this is the future and this market is going to be huge. Okay. So how is tokenization being used within the mortgage industry? Before we dive into tokenization in the mortgage industry, I want to call your attention to a 2021 Fannie Mae mortgage lender sentiment survey. How will blockchain shape mortgage lending? One of the survey questions asked the respondents, who were executives within the mortgage industry, is what are the most and what are the least appealing solutions for blockchain technology? In 2021, mortgage executives thought that the most appealing uses for blockchain would be digital wallets and title registry. Note that the least appealing uses for blockchain would be stable coins and tokenization. In contrast, in 2023, one of the most talked about use cases for blockchain in the mortgage industry is tokenization. So you can see how things have evolved even within the span of a couple of years. So how is the mortgage industry using tokenization today? First, as a vehicle for raising funds or providing liquidity. One way is for real estate security tokens that offer an excellent source of capital for the production, acquisition, or extension of real estate property. Another way is to help the mortgage origination process through the use of tokenization within the securitization process. Note that the primary difference between tokenization and securitization is that while tokenization turns all real-world assets into highly liquid digital tokens, securitization converts low liquidity assets into higher liquidity security instruments, which are traded in markets and over-the-counter platforms. We're going to talk about this a little bit more in the upcoming slides. Last thing I wanted to mention are crypto mortgages. I don't think that these are true examples of tokenization, but rather the use of crypto as collateral for a mortgage. But I'm just including them for completeness. Other examples of tokenization include using them to raise money for distressed property. by tokenizing those properties in bad condition, increasing their valuation, and selling them on the open market. Also, selling established assets, a decreased investment threshold allows multiplying the number of people willing to buy property, which means you have more liquidity. Commercial real estate tokenization is particularly impacted due to the significant unit price. And the last option on here, creating a real estate marketplace, creating a tokenized real estate platform where you can sell multiple properties, raise money for real estate developments, and enable a large number of users. So let's talk about some specific use cases on how tokenization is being used in the mortgage industry. The first item, in 2022, Redwood Trust subsidiary Corvest announced a $313 million securitization backed by single-family rental loans. These are rental loans. One of the distinguishing features is that the loan payments are tracked using blockchain technology from Liquid Mortgage, and this means that investors can view the loan payment activity on a daily basis. So a lot more transparency. Liquid integrated its solution within a single mortgage servicing company to get payment data. Its platform used the Stellar blockchain, but didn't store any personal data on that blockchain. Apart from sharing payment data, Liquid Mortgage's platform helped with tokenization and due diligence. This securitization was actually the subject of a highly circulated white paper where Redwood Trust noted that there was 100 basis point savings in audit and compliance expense through the use of tokenization. So if you're familiar with mortgage securitizations at all, 100 basis point savings, that is huge. Another couple of examples within tokenization is some of the work from Figure Technology. In one example, Figure released asset-backed securities based on HELOC loans with data stored on their provenance blockchain. It's also using its solution as a mortgage registry instead of MERS, which is a mortgage industry-wide standard. Figure also co-founded one of the most interesting payment initiatives, at least I think, in the banking world, the USDF Consortium for Tokenized Bank Deposits. And another example that's not included on here is Figure received approval for an alternative trading system, ATS, to create a marketplace for tokenized equity and funds. So that's just some of the work that Figure's doing. Another use case is the Home stablecoin backed by US home mortgages. Home is the new cryptocurrency backed by the same mortgages used by governments, insurance companies, high net worth individuals to preserve and grow their wealth. Home is available to anyone in the world with a DeFi wallet. Payments from the loans backed by homes flow back to the holders of the Home stablecoin. So you get a stablecoin backed by homes in the US and a part of the payments from the homeowners. Pre-2022, there were several companies that offered something slightly similar, crypto-backed mortgages. I mentioned this in the previous slide. However, since the crypto winter and the issues with Silicon Valley Bank, a lot of these companies have bring crypto mortgages, and quite a few of them have gone out of business altogether. The last use case that I want to go over is a True Token from SunWest Mortgage. This is probably one of the most innovative uses of tokenization within the mortgage industry. SunWest Mortgage uses blockchain and AI technology in their mortgage application that converts a pre-approved property-specific loan to a property-agnostic tradable non-fungible token, an NFT. A borrower or his broker completes a loan application on their mortgage platform called Angel.ai. Assuming everything on the loan application is in order, including credit, title, verification of employment, all of that, Angel then generates a pre-approval. This pre-approval is then converted into an NFT, and then this NFT is backed by real dollars and guaranteed by SunWest Mortgage. So it's that last part that I think is really important. This approach not only opens buyers and sellers to wider opportunities, but it empowers different income bracket parties, the ability to present and accept offers with certainty and without the open-ended financing contingencies. So for example, if I had a true approval and there were 10 homes that I was taking a look at, I can use that to make an offer on all 10 homes simultaneously. Whichever buyer accepted that offer snaps that up. But the advantage to me is I get to be in front of the line of people that just have a pre-approval letter. So I think this is really an innovative use of tokens. Let's go on to the next slide. How else is tokenization being used within the mortgage industry? I'm not going to go over all of these slides here, or excuse me, all of these companies here, but I just wanted to give you a scan of some of the companies that are using tokenization in mortgage and the overall larger real estate market. For example, Roofstock. They were founded in 2015. They're a San Francisco-based real estate investment company. They already have $5 billion in transactions since launch. Another example is Honeybricks. They offer investors an opportunity to gain exposure to commercial real estate. They allow investors to tokenize investments on pre-approved projects, thus providing fractional ownership of assets on the Ethereum blockchain. So I'm not going to go into the others, but if you are interested in some of these other companies, definitely reach out to me, or you can take a look at them by yourself on the internet. Okay, this is, and I emphasize this, a very simplified and generic overview of the tokenization process. If you'd like a more detailed walkthrough, again, please reach out to me. First step, finalize the deal. The factors that influence the final deal: type of assets, jurisdiction, type of shareholders, and relevant regulations. Form the appropriate legal structure and minimize risk. This is really important, especially for real estate. Various options are available for the property owner, and he or she can opt to form either a special purpose vehicle, SPV, become a member of a real estate fund, or take part in a real estate investment trust or REIT. Other legal issues to consider, though, is assess if the tokens that you're using pass the test for security. So, and I'm talking about the HOI, I can never remember how to pronounce this, but it's the test for securities that refers to the US Supreme Court case for determining whether a transaction qualifies as an investment contract. If a transaction is found to be an investment contract, it's considered a security, and it's subject to registration requirements under the Securities Act of 1933 and the Securities Exchange Act of 1934. Also, make sure you take a look at whether it falls under Reg D for exemption for private offerings, and file with the SEC to register tokens as securities if they are properly traded. Another key step is selecting the appropriate token. The appropriate technology. Now, the previous speaker had spoken about some of the blockchain technology variations that are available. but the right blockchain needs to be chosen to create the token. Investors will require a custody solution to store their tokens safely, and the securitized tokens can be offered to investors through primary issuance or trading them. Choosing the right blockchain can easily be another webinar, so we're not going to dive down this rat hole. However, I do want to mention some of the blockchains that we've already discussed in this presentation and the earlier one. The Stellar blockchain, Provenance, and Hyperledger Fabric. But there are clearly a lot more blockchains out there, or you can create your own blockchain, as the previous speaker had mentioned. The last step in creating a tokenized real estate asset is, once the token has been created, a distribution plan must be prepared according to the total supply available. Multiple payment methods need to be accepted when potential investors purchase the token, and then you can view the amount of funds available by taking a look at whatever cap table you've set up. Despite the many benefits, the integration of blockchain in the mortgage industry also
Hey, Marvin, sorry to interrupt you, but yeah, I'm just doing a time check. So if you could wrap up in a minute or two. Yeah, if you could wrap up soon, I would appreciate it.
Okay. Sorry about that. I do kind of talk too much. I mean, the thing that I really want to mention on the limitations of blockchain is, just for the mortgage industry, the adoption of blockchain and tokenization is a huge technology hurdle. One of the things to consider about the mortgage industry is it's not a leading edge. It doesn't employ leading edge technology. And in fact, I would say it's usually a laggard, but that means that tokenization must work within the existing confines of mortgage technology. I'm just going to go ahead and skip to the benefits. I think since we're all here, we understand the benefits of tokenization and improved capital efficiency, democratization of access to capital, operational cost savings. I think some of the key things to note on here really were mentioned in the earlier one: transparency and security. I did want to mention, as I said, I am the chair for the mortgage subgroup within the Hyperledger Foundation. On Thursday, September 14th, we have Pavan Argawar, the CEO of SunWest Mortgage. I mentioned them on one of these slides. He is a fantastic speaker, very dynamic person. I have a huge amount of respect for him and what he's done with SunWest Mortgage. I encourage you to join us. This is a monthly webinar that we hold under the umbrella of the Hyperledger Foundation. So with that, I know I may have gone a little long. I want to thank all of you. Thank you, Tanvir, and see if there are any questions.
Marvin, we'll skip the questions in interest of time. I would have loved to have done it, but
Absolutely.
Otherwise we'll fall behind. Great presentation. I think this was what I wanted, fairly 10,000 higher level. The next time we have you, we can delve deeper into some actual use cases and get into some of the details. And I think it'll be perfect. So people have this, and then I think that'll be a beautiful follow-up. Also, when I'm in LA, I would love to come and break bread with you. So, I'll be in touch. All right.
Absolutely.
All right.
Thank you.
Care. Thank you for joining us.
Yeah.
Take care. Okay, I think this is great how we are progressing. Now we have a very exciting success story, and really appreciative of the speaker who's joining us. His entity Bitbond has created a great reputation, and they've done some really cool things. And we have Radoslav Albrecht, who's the founder and CEO of Bitbond, joining us to talk about a use case on how ABN Amro Bank, very large name in global banking, especially in Europe and other parts of the world, how ABN Amro issued tokenized corporate bonds on the public blockchain. I think it's almost 10 years since he founded Bitbond. So congratulations, Radoslav, on the 10-year anniversary. In his previous life, he worked as a management consultant for a very prestigious consulting company, strategy consulting company in Europe. So very excited to have you on. I think this is a great use case. I think brings great value to everyone. I'd like to turn it over to you.
Great, Tanvir. Thank you so much for having me. It's a pleasure to be here and to talk about tokenization, and then specifically, of course, about the ABN transaction. I would briefly introduce what we do at Bitbond, how we look at tokenization, and then elaborate a bit on the particular use case with ABN Amro, which I'm glad that you let me talk about it, because I think it's a great example of how tokenization can be brought into capital markets, and what are the benefits that it can bring. To introduce Bitbond a bit, we are a technology company, like Tanvir mentioned. We've been up and running for 10 years now. It's crazy how fast time is running. We originally started with a slightly different business model, but today, and since about 4 years, we focus on providing tokenization technology. We are an infrastructure provider, primarily to financial institutions and issuers of tokens who want to configure tokens, launch tokens, and manage the life cycle of tokens. When we work together with banks such as ABN Amro, we often also provide professional services, mainly consulting around strategy and technological questions related to tokenization. Often there is a connection to custody, for example, because those entities who want to issue and manage tokens will often need to also safekeep them. And so there's a very close connection on a technological level between the custody part and the tokenization part. And so on the one hand, we have our proprietary tokenization product, and on the other hand, we support banks and larger clients when they plan and implement tokenization related projects. The product that we have is called Token Tool, and it's an asset agnostic infrastructure that lets you create tokens and manage them. The term asset agnostic is relatively important to us, because the way we look at tokenization is not asset class by asset class, but we want to provide an infrastructure that can be used across different asset classes. One of the reasons for that is when you tailor the infrastructure from asset class to asset class, you don't realize as large economies of scale as you could, and your relative costs are simply bigger. And the way we make that work is that with our product Token Tool, you can configure tokens and can configure them in all kinds of ways, so that these tokens can represent securities such as bonds or stocks, but they can also represent fund shares, and they can also represent all other kinds of illiquid assets, and be digital twins of vintage cars, art, and other real world assets as well. The way we make it work is by supporting different token standards. You may have heard of the ERC20 standard, of the ERC 1400 standard, which is primarily used in the context of security tokens, or the ERC 721 standard, which is used for NFTs or so-called non-fungible tokens. And you can use the product in order to configure them and launch them and manage the lifecycle. One last comment about the lifecycle management, and then I'm going to talk about in much more detail about the ABN transaction. Lifecycle management means that throughout the token lifecycle, there are events such as corporate actions where you may need to do something with the token. A very simple example is, let's assume the token represents stocks, then you have a capital increase, for example, which means that the number of outstanding shares is being increased. In such a case, you need to mint additional tokens. So you need to interact with the existing token smart contract, as it's called. You may also have a capital decrease, in which case you need to decrease the total token supply, which is a technical process called burning. Then there is payments that happen throughout the life cycle of an instrument, such as a bond. You may have coupon payments, you may have dividend payments in the case of a stock. And when you have an on-chain payment method, such as a stablecoin, for example, then you can actually use smart contracts in order to automate these payments. With that, you can replace the function of a paying agent, which typically conducts its work in a relatively manual way. But you can formalize all of that in a smart contract, which then allows you to trigger those payments in an automated way, collect them from the issuer who needs to make the payment, and distribute them to the investors who are entitled to receive these payments. And so we provide smart contracts that allow you to do all of that. And now coming to the ABN AMRO transaction, we are going to look at a concrete example, how that can play out in practice. First of all, as an introduction, ABN AMRO is one of the largest banks in the Netherlands, and among many other successful and large business lines, they are very strong in debt capital markets. So they work with a lot of corporate issuers, for example, which they help to raise funding, debt funding primarily, in the public capital markets. And we've been in touch with ABN AMRO since nearly 3 years now, and we have presented to them what tokenization means, what are the benefits of tokenization, and they got quite excited about it early on. And so we started to work together on a transaction. And what ABN AMRO did in a first step is they did several internal workshops to understand the implications of tokenization better, which business units does it touch, and what would it look like in order to implement an actual transaction. Then they decided to do an internal pilot because typically as a bank, you need to do a lot of risk mitigation. You need to understand the implications of new processes very well. You need to test it. And so the decision that they made was to do an internal pilot first, which I personally believe is a very good way to do that, because on the one hand, you cannot do everything based on slide decks. You sometimes need to actually, implement stuff. At the same time, you want to limit your risk exposure and do internal things first. And that's the way a lot of banks are approaching tokenization and in general technological transformations. They would do a pilot, and when that is successful, then move on to a real transaction that involves real money and real clients. And so about a year later, after we started to work with ABN AMRO, they've completed this internal pilot. They did a bond that was issued by ABN and also invested to by ABN. However, that already helped them to answer a lot of questions, such as what kind of legal implications does a tokenized bond have? What legal framework can we use in order to issue this tokenized bond? How is the treasury process? How do we settle the payments? Do we do that on-chain? Do we do that off-chain? What mid-office and back-office functions need to be involved? So plenty of questions came up, and that's also the reason why it took several months to actually complete this internal pilot. The good news was that the pilot was completed successfully, and most of the questions that were supposed to be answered actually were answered with that pilot. So as a next step, ABN AMRO decided to do a, so to speak, real transaction with a client of the bank. And they have chosen one of their corporate clients called APOC, which is a aviation part out company that was in a fundraising process anyway, and they decided to do a tokenized bond. So they again went through a legal evaluation, but also a lot of technological questions needed to be answered, which is where our primary role was in that project, to provide guidance and ultimately the software that is necessary in order to launch a token. The transaction that they did was a 400,000 euro tokenized bond by this corporate client of ABN AMRO called APOC. The bond was purchased by several institutional investors. These institutional investors were highly interested in gaining first-hand exposure and experience in investing in tokenized assets. And so it was a win-win situation. ABN AMRO have already conducted the internal pilot. The issuer was interested in gaining access to innovative ways of raising capital from investors, and the investors wanted to understand the investment process of a tokenized financial asset in a better way. Maybe a few more technical details. As a blockchain, in this particular transaction, Stellar has been selected. Part of the decision goes back to the early days when ABN AMRO started to look into tokenization. Back at the time, there weren't really good scaling solutions to Ethereum, which of course is the dominant blockchain when it comes to tokenization. However, one of the goals of the transaction was to achieve the highest level of efficiency that's possible. And back at the time when we went through these decision-making processes, Stellar was one of the best blockchains to use when it came to settlement speed and low transaction fees. Of course, by today, this has slightly changed. And at Bitbon, for example, with our token tool, we support 7 different Ethereum compatible chains, Ethereum itself, of course, and Polygon and many others, and also Ethereum compatible private chains. At the same time, we also still support Stellar. There are still situations where Stellar is a very beneficial protocol to be used, and such was also the case with ABN Amro. I think these are the main points that I wanted to mention about ABN AMRO, and maybe we still have 2 or 3 minutes for questions, and if that's the case, then I would be more than happy to take questions now.
We'll try and take at least one question, Radislav. Let me see if, let me monitor the chat right now. And while we do that, yeah, in the future, would love to see you and Stellar come back and, you know, and we'll allocate more time. I think this was a good start.
Absolutely.
I did not see any questions unless I'm missing anything. And also we are at the end of, you know, the 10 minutes past the hour. So I'll let them, if anyone has a serious question, I'll let them try and connect with you through your LinkedIn or through social media. That's
absolutely,
okay.
No
and
problem.
And feel free to post, you can post your handle before you leave. That'll be great. And I know it's fairly late in the evening in Europe, in Germany. So appreciate you joining us today.
Yeah, that's not a problem at all. It's a pleasure. And yeah, thanks a lot for the invitation. I'm posting my LinkedIn here in the chat. I'll just need to see. Tanvi, I can't see the general chat. Maybe if you can paste it over into the general chat.
Okay, if you can do that, I'll do that.
On LinkedIn, and if you want to send me questions over there, then please feel free to do so.
I will do that. Thanks again. We'll be in touch, Radislav.
Thank you so much.
My pleasure. Take care. Folks, now we switch to real estate, tokenization real estate. So the next 2 talks are dedicated to tokenization and real estate, and you're going to absolutely love this panel. And I greatly appreciate the efforts of Gabriel Sadoun, who's the head of business development at a company called DigiShares. DigiShares has also carved its name in the tokenization space. If I have some time, I'll talk about a report called the State of the Tokenization Economy for 2023. And they were among the 10 companies that were featured there. He's done something really cool where he put together this panel, which was a great help. And he's going to introduce the panelists today. So with that, I would like to bring up Gabriel Sadoun to do this panel on tokenization and real estate. Over to you, Gabriel.
Thank you so much, Tanvir, and thank you for organizing this great event. So yeah, my name is Gabriel Sadoun. I work with DigiShares. We're a real-world asset tokenization platform based in Denmark with offices in the US as well. I'm based in Miami. And I'll be the moderator and also panel participant for this next talk. And I'm really happy to be joined by 2 great panelists. We have Ryan Zega from T0, which is one of the leading secondary trading venues in the space. And we have Gary Rommel of Alamer Law, who's a very knowledgeable lawyer in this space as well. So with that, I'll let both of you briefly introduce yourselves, and then we can get going.
Yeah, awesome. And thank you for the introduction and having me on the panel discussion. My name is Ryan Zega. I'm a senior director at T0. Joined the firm about 3 years ago to initially spearhead our real estate and fund initiatives. And at this point, work with a wide variety of private companies, partnerships, and other issuers that are looking to either raise capital, tokenize, and or trade on T0. Prior to joining T0, I had a very traditional acquisitions, asset management, and debt origination career at Paramount Group, Normandy Real Estate Partners, and PGIM Real Estate. But love to hand the discussion over to the next panelist.
Yeah, Gary, if you want to briefly introduce yourself.
Yeah, hello, I'm Gary Rommel. My background, I was in the Air Force for a lot of years. I used to run the airborne computer networks aboard AWACS aircraft, the big radar plane. I went to law school at Loyola in Los Angeles. I started specializing in IP at a large firm, and then I shifted several years ago to focusing just on digital assets and sort of all things blockchain and securities. And I'm based in Monterey, California. I'm licensed to practice law in California and Washington. I'm actually traveling at the moment, and I'm in Utah, where I'll talk in a minute about some good legislation coming out here.
That's great. Thank you, Gary. And just for my background briefly, before joining the DigiShares a bit more than 2 years ago, I used to work for a small investment bank in New York City on capital raises within the alternative investment fund manager space. Okay, so let's get started. In previous panels, the tokenization has already been defined, and I'm sure you all are quite familiar with the basic definition, so we won't go into that again. But I want to look at it from a practical level and see and try to understand how what the real estate tokenization process looks like. So if someone were to tokenize, to want to tokenize a real estate asset, what would that look like? And I often speak of three main pillars: the legal side, the tech side, and the secondary trading side. So I guess a great way to start would be if Gary, you could tell us what the legal process looks like to tokenize a real estate asset.
Absolutely, absolutely. So as we all know, there's three basic asset types that go on a balance sheet. There's a financial asset, there's a tangible asset, and there's an intangible asset. Financial asset, cryptocurrency, stock, bond. Tangible asset, real property. Intangible asset, intellectual property. Well, what are we doing when we actually tokenize real estate? There's a narrow use case where we can turn the title into a token, right? And then the title settlement is actually the token transfer. That's extremely narrow. Somebody like Proppy is already doing that in Palo Alto, where you're selling a whole residential property as a token, but that's really not what we're talking about here. We're talking about generally people want to use it as a REIT, in which case they're not going to want to operate as sort of a bare DAO entity, or else they'll just be schwacked as a partnership, and there'll be liability all the way around. So we've got to wrap it in some sort of an entity. And that brings us to our typical US entity choices to discuss first, and then sort of the newest ones. You've got generally, partnerships, which we've ruled out, limited liability companies, or corporations. There's also, as of, I believe, Vermont was the first one to do it, a BBLLC in about 2018. The next one was Wyoming. Wyoming did a DAO LLC in 2021. After that, Tennessee modeled after Wyoming's law. And then Wyoming in 22 went back, and their legislative session made some amendments, which had some problems with my filing. There used to be some management issues. You can manage an LLC as a manager, and then there's members, and they intended for it to be member managed in like the state of Wyoming. So you've got those basic entities, and it's really a matter of choosing, do I need an actual DAO entity, or do I need a corporation or an LLC that a state allows the cap table to be managed on a distributed ledger? There are other states like Delaware, New Jersey, Texas, Nevada, even Iowa, California, which legislation is going to expire in a few more years. They just extended it, that allows a corporate record to be kept on a distributed ledger. So it's not necessarily a DAO entity where it's envisioned all members manage it equally, that you can have that just a regular Delaware corporation, a regular Delaware LLC, a regular California corporation, and you're simply tracking your membership or your stock on a distributed ledger. Gabriel, is that? And I was going to say there's basically 5 types of securities and securities forms. You've got certificated securities, which most people have gotten away from, right? We're all doing book entry shares. And then, so there's certificated, there's book entry, there's dematerialized non-certificated shares, there's digitally enhanced non-certificated securities, and there's digital asset securities. So when we think about, we've tokenized a corporate stock, right? That stock, if that token directly represents that stock, that's a digital asset security. And transferring that token is transferring the stock. Now, most people aren't doing that yet. That's where we would like to get to here in the United States. That's where our legislation should be going. I think that's going to be a better system. But right now, the way most of us are doing it is as a digitally enhanced non-certificated security. And by digitally enhanced, it simply means we're keeping a carbon copy of that capitalization table on a blockchain for the participants to access that ledger. So it's not just our book entry as a lawyer or as a corporate counsel. It's a book entry that everybody has a chance to participate in and hold a piece of. So there's more transparency and a little more security.
Very clear. Thank you. Thank you, Gary. And so once you have the entity set up, and if you're raising capital, a legal game plan set up, you're going to need a tech platform for the initial intake of investors for the primary raise. So I'll just talk briefly about that side of things. So the only thing you need on the tech side to begin with is a website. And on the top right, generally, you'll have a button that says, sign up or invest now. And that's where people will click to be pushed into the back-end tokenization platform that you'll select. And some people do it white label, some others not. At DigiShares, we're white label, for example. But that platform should enable you to create the smart contract and to investors. And so you'll have to choose potentially various integrations like the KYC provider to make sure that you're compliant and that every investor is checked against the anti-money laundering list, for example. You'll have an e-signature integration, payments, whether it's crypto or fiat. Some people think that because an asset is tokenized, you can only pay with crypto. That's not necessarily the case. You can have fiat and then the tokens are delivered. And custody, same thing. You don't necessarily have to have a self-custodial wallet like MetaMask, although that could be seen as more elegant in terms of the tech. You could have a custodial solution as well with a third party that's registered as a trust. And that's regulated as such. So investors don't necessarily have to bring their own wallet. So these are all considerations that you're going to figure out with the tokenization platform provider that you're going to choose. And depending on the type of offering, if you're raising capital, if you're doing a Reg A, for example, raising from US retail investors, you're going to need a transfer agent. So that's something to check for as well, that the provider has that license, the transfer agent license. But in any case, there'll always be a cap table management tool and a way to send distributions and organize votes and communicate and things like that. And so once you have all of this, people can go to your website, click sign up or invest, go through the flows, and they can become a shareholder in the project. And that's when trading can start. And so I'll hand it over to Ryan for more on that.
Yeah, definitely. No, thank you for that comprehensive overview. And then, basically at T0, we deal with two different circumstances. One is similar to what Gabriel discussed, an issuer that's going out to raise capital. And, as Gary noted, there's a variety of ways to raise capital, Reg D, Reg A, Reg CF, kind of choosing that pathway forward. And then they might identify T0 as their intended secondary trading platform. The other circumstance is an issuer that's already raised capital. So they may have raised capital for a private company, an individual private placement, a fund, or some other structure. And they're basically coming to T0 and or DigiShares to take that existing structure and allow it to trade on our platform. So we'll conduct due diligence ahead of trading, basically business, reputational, and legal due diligence, get an understanding of the asset, what's trading, depth of cap table, et cetera. Obviously go through sort of the formal documentation. And then once that asset's eligible for secondary trading, which will partly depend on the type of offering that's been utilized, as well as the applicable seasoning period. We'll then onboard those individual issuers through our retail broker dealer. They'll open accounts, go through their KYC and AML process, be preceded with shares, and then once trading commences, we'll basically flip the switch, and then that trading will commence on a live continuous basis, depending on the kind of asset type, offering type, et cetera. And then that trading venue, right, who will be able to trade that asset will be dependent on the type of asset that's offered, and then whether it's eligible for trading amongst non-US and US investors, whether it's among both US based and or non-accredited and accredited investors. And basically we have the ability to set those guardrails within our trading environment. So, other than real estate, we're working with a number of different asset types, private companies, natural resources, sports teams, et cetera. So it's a very diverse pipeline that, we see here. And then we're also working on customized solutions. So trading with cadence, right? Semi-annual, annual, and quarterly trading, or even recapitalization. So, T0 as a whole is pretty flexible on what we can provide, and it really is on an issuer by issuer basis, depending on how the issuance was done, what offering type is being utilized, the structuring, et cetera. But yeah, just turning it back to you, Gabriel.
Yeah, thank you. And I think you mentioned something very important, which is the lockup periods. You mentioned it briefly. I think it may be useful to just double click on that for a minute. Could you explain a bit more and how it ties into all of this?
Yeah, exactly. No, that's a good question. So depending on the offering type that was done, that partly dictates the secondary trading period. So good example is, a Reg D 506C, for instance, or 506B, can be tradable under certain rules and exemptions. One is Rule 144, which allows for a broader trading environment 1 year post capital raise. We also see Reg Ds that want to trade potentially under 4A7, which allows for trading as early as 90 days. Obviously, these are just kind of like broad brush strokes, and I would, work with your counsel to determine what your applicable trading period would be. But that's some, kind of high level thoughts there. On the Reg A side, we have a number of Reg A issuers that have gone through qualification, that are raising capital, and then looking to trade, as early as almost immediately post capital raise. So yeah, that's something to be mindful of, right? Depending on your offering type. And then, obviously your counsel will be able to provide more fulsome details on what that secondary trading would, be like. And I'm sure Gary has some thoughts on that as well.
Yeah, maybe Gary, if you have some thoughts, and also how it ties into the smart contract itself, that could be interesting.
That's it. Yeah, how it ties into the smart contract itself, especially with these, we like to have holding periods. For the 144 holding period would be 12 months for a non-reporting company or 6 months for a reporting company. You've got 4A7, like Ryan discussed, and then you've got the old, 4A 1.5 rule that was codified by 4A7 with statute. If it's a Reg S, if we're selling a U.S. company to non-U.S. investors, we're kind of under a different rule, 903, 904. And again, that's still sort of a 12-month holding period. What I like to recommend to issuers using platforms like this is to go with the Rule 144, because that mirrors the foreign rule. And we can actually program that into the token. You can use, I believe DigiShares, you're using, like I say, they can use different blockchains. If they use Ethereum, they can use, 1404 standard, and they can program in the holding period for that token representing that security. So it absolutely cannot be transferred until that holding period is up. And then they can implement their KYC or any other accreditation issues if they would like, which they don't have to be accredited after a year in a 144. And that is very helpful, because before this programmatic option, it was just the Wild West with who could transfer what, and it was a bigger concern with SEC about control over those tokens, and that concern has been alleviated by the latest protocols.
Thank you. And so now I want to talk a bit about the benefits of doing this, and tie it into maybe a case study. And I'll hand it back over to Ryan. If you could maybe talk about liquidity and what you guys have done at T0.
Yeah, definitely. So, when we think about kind of tokenization and T0 specifically, issuers tokenize to trade on our platform. So they're taking an existing asset that typically is very high barrier to entry and illiquid, and then allowing those investors to come onto our platform and then transact in a much more fluid manner amongst hopefully a wider audience. So yeah, a lot of our issuers want to have that benefit to their existing LPs of, hey, let me allow you to trade as I'm creating value in that potential 5, 7, or 10-year hold period, right? Regardless of it being a real estate asset, a fund, or a private company. So yeah, that's kind of one of the things, right? Is providing that wider audience, and then your existing LPs the ability to trade. And then we have a lot of issuers that are out raising capital with secondary trading in mind, so that you can differentiate your product and essentially raise capital with this added benefit of secondary trading versus, your LP being in a very traditional structure where they're illiquid for that time period. But yeah, Gary and Gabriel, I don't know if you want to go into, some of the other, aspects, P2P transfers, et cetera.
Yeah, for sure. And I think, one great consequence of having the liquidity optionality and a platform to efficiently trade is that then more people can participate. So we talked about the lockup periods, but so people should understand that after the lockup period, anybody can then trade, and even retail investors. So that's opening up barriers, or taking down barriers, sorry, and creating opportunities for smaller investors to participate. It's kind of like doing a mini IPO without having to become public, which is really an expensive process. So you can, I think democratization is a great consequence of an advantage of all this. I would also mention the atomic swaps. That's an important concept to understand when it comes to payments and settlement. So the atomic swap is a smart contract that two parties can enter into with their wallets, and it'll verify that the terms of the trade are respected. So on the one hand, you'll have it'll verify if you have the number of tokens that is going to be traded. On the other side, if there's the correct amount of USDC stablecoin, let's say, that's meant to purchase the tokens, and then it'll effectuate the swap automatically in a disintermediated way, and so that cuts out potentially a ton of middlemen, such as escrow and potentially custodians, and maybe later on the central securities depositories or the transfer agents and the banks that are acting as middlemen within the SWIFT system and all that. And so, by really lowering the amount of intermediaries, you're lowering costs, making the trading experience more efficient, and enabling these smaller investors to participate. So maybe the primary raises will still be done by larger investors, like in a real estate development, commercial development. Maybe you'll have some large investors providing the seed capital, just like VCs provide seed capital for tech companies. But then in the secondary trading, anybody can come in and trade, and we can potentially move away from a world where the only way to trade real estate easily is via real estate investment trust, which only represents 1% of the total real estate value worldwide. And maybe that 1% can go above 50%, as is the case for listed companies. I think it's 56% of Americans own a piece of a public company. So it's really broadening access to people for real estate. And so I'd like to turn things back to Gary. If you have any further benefits that you'd like to talk to on the compliance, governance, transparency side, and if they're also interest. You mentioned that you were in Utah and there's interesting legislation. And if you'd like to talk about some legislation, that's
thank you, Gabriel. Yeah, the Utah legislation here used to be like Wyoming, the Tennessee law, those were DAO wrappers. They took an LLC and they tried to wrap a DAO under it. The Utah legislation coming out is sort of a brand new entity that's it's an LLD, a limited liability decentralized autonomous organization. And Utah, they're trying to beat Wyoming as sort of the blockchain capital for this store. There's a lot of fintech activity that happens here. That allows the members, it's like I said, it's not a manager managed item with the Utah LLC. The members will manage it, and they have to have legal counsel, which of course I like, to manage any contracts in the real world, because they imagine, people have to actually operate at the periphery. And the Utah legislation, it's not set to come into effect until January of next year. So that's when we'll be taking a hard look at it for other people. The thing to note about the Utah legislation is Wyoming and Tennessee just suggest that we use a non-permissioned public blockchain, right? Or a permissionless blockchain. The Utah legislation requires a permissionless blockchain. So that's a little bit of a game changer. They also recognize that there's maybe some partly autonomous management that can happen. And there's some dissolution issues that don't occur with Wyoming. If it goes dormant in Wyoming for a year, it can just dissolve itself. And it's just a different beast. So I'm very excited to see the Utah legislation come up, and we'll see how that affects other blockchains, like Ethereum. There was some recently, just on the technical side, people figured out how to use Verkle trees to run stateless nodes, Ethereum nodes on a cell phone. So that's sort of a latest innovation. So we might be able to see some different, instead of having a wallet, somebody might be able to actually run a stateless node and see the state of the ledger directly from their phone while they're running their own validator. And that could be an innovation that really helps this become more mainstream. Behind Utah's legislation is New Hampshire, who is also, they're kind of mirroring it after Utah. So that'll be another one to watch, is New Hampshire.
Thank you, Gary.
I want to do a time check. The panel has been great, and I wish I'd given you guys more time. If we can start wrapping up, that'll be great, so that I can bring up the next speaker. And can't wait to see you do a masterclass in California.
Thank you, Tanvir. Appreciate it.
Thanks, Tanvir. I just going to wrap up as well, and say thank you to the panelists, and to you, Tanvir, and to everybody who listened. And hand it back over to you, Tanvir.
So Ryan, Gabriel, Gary, thank you so much. Gary, you're down in Monterey, not too far from San Jose. I go often there, so hopefully we'll be able to meet. And Gabriel, I'll follow up with you. You got to make a trip down to California soon. All right, hopefully October.
Sounds great. Thank you.
And I'll follow up with each of you guys. Great panel. Phenomenal work, guys.
Thanks, guys. Bye-bye.
Thanks.
Hey, man, keeps getting better and better. We're still sticking to real estate before we switch gears to the energy side, to energy, climate, green energy topic. So for the second presentation on real estate, we have a speaker who's hugely popular on YouTube. His videos have generated, I think, over 500,000 views, if not more. He's got some great content out there. Boris Pikolov is the co-founder at Stobox. Stobox also has carved a very good name in the asset tokenization space. I did a fireside chat with him a few weeks ago and actually loved that conversation. I said, I got to bring Boris back. He's got a great topic to solving the liquidity puzzle for tokenized real estate, and he's joining us all the way from Poland. A quick note on Stobox: they are an award-winning tokenization company that provides technology and consulting to help their clients leverage digital assets and tokenized securities. So very qualified to speak on this topic. You have 15 minutes, Boris. I'll turn it over to you. Thank you so much for joining.
Thank you so much for inviting me and for the kind words. And thank you everybody who decided to join and spend your time educating and learning about innovations and the cool stuff that you can do. Well, let me check if I can share my screen.
Yes.
I guess you can see it now.
Yes.
Super. Okay, so I'm here to continue the topic that has been raised by the previous speakers about liquidity as being the primary benefit of tokenizing property, or just almost any other kind of asset. And for those who don't know, liquidity is just how easy it is to trade the asset, to buy and sell it, how fast you can find a buyer, and how much effort do you need to put into selling it at the right price. Apologies for the background noise. And liquidity is, to me, is one of the key determinants that distinguishes tokenization from other kinds of fundraising, because you can get fractional ownership with crowdfunding, for example, if you go for equity crowdfunding, but if you can get it with rates, for example, but there are very few other options that allow you to get liquidity, especially for single assets. But the problems I have very commonly observed is that issuers believe that merely issuing the token is enough to create liquidity, to get the token traded. And this unfortunately can be further from truth. And this really harms the industry. This harms the potential that we can reach, and it harms the success of many projects that we are seeing. And this is why I'm having this conversation. My goal is twofold. One, to expand your perspective on what is required to actually realize liquidity and get the return on investment on your tokenization efforts. But secondly, also to connect it to big ideas about what transformation in general is happening thanks to blockchain, and probably also to inspire you a bit to pursue tokenization and liquidity and get onto this ship of this great transformation. So, but before I proceed to discussing how to create liquidity, let's spend a few minutes discussing why do we want to create liquidity. And the reason why liquidity matters is because markets matter. In order to understand why do we want liquidity, we need to ask, what is the benefit of having efficient liquid markets? And for this, we can ask a granddaddy of economics, Adam Smith, who taught us that when you have a good developed market, you get the invisible hand effectively allocating goods and services and assigning price to them. What it means in the context of capital markets is that liquid markets create efficient allocation of capital and efficient pricing of assets. Now, think about this for a second. Only less than 1% of companies in the world are publicly traded and therefore have sufficient access to capital and adequate pricing. For the biggest part of the economy, their access to capital is constricted, and we don't have the market actively deciding which of these companies are more and efficient. So I actually tend to believe that illiquidity of private markets is the biggest inefficiency that exists out there. And by unlocking this liquidity and creating efficient markets for assets like real estate, like private equity, we can significantly increase the economic growth. And our economy can be, instead of being like 2 times bigger in 20 years, it can be 2.5 times bigger. So this is about prosperity for all of us. Moreover, increased access to capital for small and medium enterprises is also about equality, because entrepreneurship is one of the main social ladders, because small businesses and startups are the main creators of new jobs in the economy, and the decline of entrepreneurship is one of the reasons why there is a decline in employment and new high quality jobs being created. So this isn't only about pragmatic benefit of you being attractive for more investors. Some investors who don't invest in illiquid assets at all, including many retail investors, including also institutional investors like mutual funds who are legally prohibited from investing in illiquid assets. This is also creating a more equal and more prosperous world. Now when we understand why do we want liquidity, let's discuss what is necessary in order to create it. And here we have three key requirements that need to be done. We need an infrastructure for trading, we need education of investors, and we need to give investors the why, the reason why they would like to stick with you and to distinguish you from other companies and go for trading. So let's discuss each of these one by one, starting from the topic of infrastructure. And this one is more complex than most people realize, because what you typically believe that all you need to do is just issue a token and then get this token listed on exchanges and you're golden. Now you have a market and liquidity and trading. In practice, unfortunately, it isn't that easy. Why? Because your asset and your market cap is anyway smaller than the market cap of typical publicly traded company. So there are just all times less people holding your tokens, and therefore less people who want to buy and sell it at all times. So it's not enough to just have a place where people can trade, because there very often you can have not enough people to conduct this trading. And for this, you need multiple components that would make this trading easier or encourage it. So it is true that one of the basic tools that you need in your toolkit is exchanges, where buyers and sellers would be brought together. But there are a few more aspects that you want to add to it. One is you want to add possibility for peer-to-peer trading. Why does it matter? Because when your asset doesn't have a large market capitalization and your market isn't highly liquid, a big trade can significantly influence the price upwards or downwards. And therefore, and this is the reasons why small cap stocks are highly volatile. And the way in which you reduce this volatility is you keep large trades outside of the main market happening between private participants who can absorb those large transactions. And therefore, you need separate markets for peer-to-peer trades in the form of a bulletin board or a matching service, which would help people who want to make large trades to connect to each other and negotiate and conduct those trades at better terms without disrupting the price and creating volatility. Because higher volatility makes investors less confident in your assets and actually decreases trading activity, which further steals liquidity, which further increases the volatility. So you get this downward spiral of increased volatility and decreased liquidity, which you definitely want to avoid. Another aspect of that is market making. I believe for companies with a market cap up to 100 million, market making is thoroughly required. Why is it necessary? Because when you have not that many buyers and sellers, it is entirely possible that I want to sell your tokens today, but someone who would be able to buy them would emerge only, let's say, in 1 week. And I don't want to wait a week in order to get this token. So we need an additional tool that would bridge between these two trades and serve as an intermediary. And this is why market makers would be are so crucial. By facilitating these transactions that are different in time, they can smooth out these fluctuations in demand and supply for your tokens and allow anybody to sell or buy your tokens at any point at a reasonable price. These market makers can be centralized, so it can be an actual broker dealer sitting there and buying and selling tokens, or it can be an automated market maker with a liquidity pool created using a decentralized exchange like Uniswap or like our exchange, Digital Securities Swap, which can facilitate these trades. One of the benefits, by the way, is that in some jurisdictions, listing on centralized exchanges would always require you to register as a public company, while having your tokens bought by a licensed market maker doesn't necessarily create such a condition. So for companies for whom public registration isn't feasible, market making can be one of the best solutions to create sufficient liquidity. Lastly, and this is the least obvious and least discussed aspect, you need a lending infrastructure in order to enable efficient markets. Why? Because of several reasons. One is because sometimes users want to make a leveraged trade, and for leveraged trades they need lending. Also, sometimes instead of selling the assets, people, in order to get cash, people can use this asset as a collateral against a loan. And real estate as a very safe asset is actually quite a good loan collateral. So this allows people to get a cash that is a more liquid asset without actually selling their property and creating a downward pressure. So to use tokenized real estate as collateral is necessary. Also, lending of securities is necessary for short selling. Think about WeWork, for example. The reason why WeWork grew so big and why we wasted billions of dollars in funding on that company is because short sellers were unable to short the company sooner than it started preparing for the IPO. And one of the reasons why it wasn't possible is precisely because there was no possibility to bet against WeWork. And this is why, by allowing to borrow securities and therefore sell them, and so making a short sale, you enable you enable speculators and short sellers to basically police the market and allow for a more efficient price discovery. So this is an infrastructure part. And now let's go to point 2, which is education. And here is the point that I like to make. Many people, we live in an economy which is mostly owned by top 1% or top 10%. And most of the US stocks, about 80%, are held by top 10% of the population. That is, most people don't invest, or they invest in only public companies and don't know how to invest in smaller private companies or real estate. And they have little experience doing due diligence and investing properly in companies that aren't reviewed by competent authorities. And they would most likely be afraid to invest in such companies, and they would be unaware of how to use all this infrastructure mentioned previously. So if you want to help people invest and trade your tokens, you need to show them how. You need to create training materials. You need to explain them how to choose between properties you are suggesting. You need to show them how to assess risks. And this is a big shift that all of us are participating in. What me and you and everybody here, what we are doing is helping people transition from consumer and worker class to an owner class. Because another big point of equality is ownership assets, and by reducing the barrier to the ownership of assets, we make economy more equal. We allow everybody benefit from money printing and economic growth, instead of this benefit only a small subset of rich asset owners. So by helping people by educating people on how to invest well, we don't just help ourselves by getting more trading volume and increasing the price of our assets, we also help them to transition to a new mode of being, which is hopefully better for them financially. And this is another big transformation that all of us are participating in. Now, moving on to my next point, and this is answering the question, why you? Because what is happening now when we are unlocking capital markets for private companies, dozens of thousands of companies are going to flood the market with their assets. And now investors are going to ask, why should we care about you? Why should we invest? Why should we monitor your tokens, monitor your company performance, and trade your token instead of a myriad of companies like you? And this is especially challenging for real estate developers and owners, because like many rental properties are the same or are compared only on very pragmatic basis. So you need to really think hard about how do you differentiate yourself and stand out on this crowded market to create the proper liquidity. A trivial answer to this question that is given by many is to merely promise outsized super high returns, like 100% return in 2 years, and attract people like that. But I believe this is to a large extent a lack of imagination and a lack of empathy for why people want to be related to companies. And this limits you in terms of business model that you can choose. So I would highly encourage you to consider alternative reasons how you can engage people in caring about you sufficiently to trust part of their funds into your tokens. And here are a few options to consider. One of them is delight. You want to create delightful experiences, because as consumers on a daily basis, we consume dozens of products. So if you want to stand in our minds, you need to create an experience that is delightful, that resonates with us emotionally, and that wants people to not only come back, but to actually become part of what people will more likely believe that your token will rise in value. You created is not just good, not just high quality, but delightful and goes beyond what is typically expected from a high quality product by consumers. Second point is purpose. Often people invest, especially in smaller companies, not because they believe in a high growth potential, although this is also a factor. Investing in smaller companies and assets, even in real estate, is still riskier than investing in Apple or Google. And one of the reasons why people take this risk is because they emotionally care about the purpose that you bring forth to the world. Why do you exist? Why do people want to support you with their money instead of anybody else? Maybe you offer hospitality for poorer folk, for example. Maybe you want to create better spaces where people can collaborate and align with each other authentically. There are many reasons what you can do which would make people care and want to trade your tokens and keep your tokens in memory instead of anything else. And last factor is community, because people because the problem with social media in modern world that we're all becoming more and more alienated and lonely, and this is one of the reasons for the epidemic of mental health disorders. And businesses can play a role in alleviating this by creating communities, by creating people who care about the same activity or the same purpose or the same lifestyle coming together around your business. And when your business becomes this focal point that unites people with different interests, that you're again more likely to be such an inherent part of their lives that not investing in you becomes actually a problem, because when you have such a high stake in their lives, they want to have a stake in you and have a voting power and economic impact on what you do, so that they can steer your company in the right direction. So creating a community and being a focal point of it is another great way to stand out and make people care enough so they would want to buy and sell your tokens, and they continuously monitor what's happening. So that's it. And the last point I want to say is that everything I told you can look a bit complex, and it is true. You and I, we are pioneers. We are still only creating the infrastructure and educating people, and this is harder than it is for, let's say, to go a standard fundraising route. But this is also so much more rewarding, not only in terms of getting more capital, getting much better terms, getting supporters, getting selling your assets at higher prices, not only in terms of these pragmatic benefits, but because when we push these boundaries and apply extra effort, we are also making the world a better place. We are promoting higher economic growth. We are creating equality. We are educating people to make better lives for them economically. We are giving people something to care about, to connect to the world. And this is worth a lot. This is probably, I don't know, for me personally, this is why I am in this business, and I probably wouldn't want to work in this if it wasn't for something bigger than merely making money. So in the 21st century, if you want to stand out, if you want to get all the benefits of innovation and technology, you need something more. You need to bring your heart and authenticity into it. And I hope I provided you with a bit of inspiration and guidance for how specifically this can be done. Thank you a lot for your attention. And if you want to contact me, if you want us to support you with your tokenization efforts, or just have a fun chat, here is my email. So feel free to reach out, and happy to answer any questions.
Hey, Boris, in interest of time, we may have to skip we are a little bit behind, so we'll have to skip the Q&A, but if you can put your any of your social media handles for people to connect with you, Twitter or something like that, please do that. And can't wait for you to come down to the US, especially Silicon Valley, for an in-person event when we host one in the future.
Okay, I'll put my email is dp@stobox.io. You can go at our website and feel free to reach out. And thank you again for inviting me, Tom.
Really appreciate that. Right, we'll be in touch. Thanks so much, Boris. Very relevant topic. So folks, just a quick note. So we had two topics. Some of your future events we'll dedicate a lot more time for real estate. That is the biggest use case in the tokenized space. So we'll be doing a lot more events around real estate. I personally experienced this myself too. A few weeks ago, I was at a VC event in Palo Alto and met two individuals. One is the owner of a chain of hotels. He had flown in from South America, wanting to know how he could tokenize some of his assets, right? And the other was a multifamily owner of multifamily properties in Phoenix, right? Probably 50, 100, 250 units, that size. And he was also very interested and had flown in from Phoenix to Silicon Valley to learn about tokenization. That week we had Build ETH, very nice event. So they were there for that as well. So there is a lot of interest in tokenizing of real assets, and our big focus is to roll out educational content because there is a massive opportunity. But I think we need to do a lot of evangelizing and to simplify any of the complexities that are there. So you can count on us for delivering ongoing content related to these use cases. So with that, we'll switch gears again. Now we're going to move from real estate to the energy and climate vertical. We have Bertrand Roux, who's joining us to cover this. He's also part of the Hyperledger ecosystem, where he's part of the energy and climate special interest group. He has arranged a couple of speakers, both of them founders of companies that are doing some disruptive stuff in the space. Daniel Norkin from OnVision Blockchain and Marcos Cherez from GoLedger. So I'll let Bertrand do a quick introduction, and then he'll bring up the speakers. So we'll devote the next 30 minutes. Bertrand, can I ask you to, maybe curtail this a little bit so that, I'm sorry, we, out of my control, we went a little over. If you could, if you are able to, great. Otherwise, we'll cut it at the back end. But if you could trim it a little bit, that'll be great. Really appreciate you, Daniel, and Marco joining us. So I'd like to turn it over to you, Bertrand.
Yeah. Thank you, Tim. I'll try to keep this short. Yeah, so I work with a consultancy, Two Ravens Energy and Climate Consulting. As Tanvir mentioned, we do a variety of work with the open source community with Hyperledger. You can find some of our work on our website, tworavens.consulting, quite simply. This includes a work on oil and gas, sustainable oil and gas use in blockchain, as well as some work on tokenizing environmental data, particularly carbon emissions, for tracking sort of product carbon footprints in product supply and supply chains. So that being said, you're more than welcome to look at our work, but I'd like to leave the floor to both Marcos and Daniel, as Tanvir mentioned. Pardon me. Marcos is going to give us an introduction more on the oil and gas and fuel side, and how the application of blockchain and also tokenization to managing things like inventory and pipelines, but also credits. So tokenization of environmental credits, so secondary attributes about fuels, for example, biomethane. Daniel Norkin will give a more broad look at environmental attributes, things like enhanced carbon integrity and transparency, and sort of policy creation for environmental attributes through Web3 integration. So at that, we'll start off with the sort of oil and gas infrastructure coordination side with Marcos. I believe Marcos is on the call. I'll open it to you if you want to share your screen and kickstart the session. Please go ahead.
Yeah, we can see the screen now.
Okay, just screen, no audio, Marcos. Just waiting for that.
And Marcos, you're still on mute.
Hey, sorry. Can you hear me?
We can see you now.
All right. Thank you. Can you see my screen? Sorry for that.
Yes, we can. Marcos.
All right. First of all, thank you so much for so I can make this presentation. My name is Marcos Sarres. I'm CEO of GoLedger. GoLedger is a company that specializes on blockchain development. We are Brazilians. So basically, there's lots of blockchain technology and blockchain projects here in Brazil right now. If you are not aware, I suggest everyone who are listening to this presentation to take a look of the Brazilian CBDC that's going to be alive next year. So basically, it's going to be a blockchain-based tokenized currency. Is going to be basically on Ethereum. But let's go back to my presentation. As I told you, my name is Marcos Sarres, and GoLedger has been specializing in developing several projects in Brazil right now, especially for blockchain and also tokenizing. So basically, we're tokenizing lots of assets. For example, we've done some projects for tokenization of digital copyrights, artist copyrights and stuff like that. But right now, I'm going to talk a little bit about the project we do have so far. Basically, a distributed platform for natural gas inventory and carbon credit tokens that we've been developing, especially for Petrobras. So basically, it's a project that's been funded by the Brazilian Agency of Oil and Gas, ANP, and we've been managed by the Brazilian company for entrepreneurship, Sebrae, and also been mentored. All the projects has been developed and mentored inside Petrobras. So basically, we are understand how the transactions, all the process around oil and gas, especially from natural gas works. So basically, it's going to be, we've been developing 2 projects right now. The first one is basically going to manage all natural gas inside the pipelines, and for inventory and tracing of the and accountability of the gas, and also for tokenization of carbon credits of biomethane. So basically, that's a huge market here in Brazil. So, but before that, let me give a little bit explanation about our natural gas market in Brazil right now. That basically you can see the pipelines, how the mesh, this entanglement that I have right here is basically our pipeline mesh that we do have here in Brazil. As you can see, that's lots of work to be done. So basically how the coast is basically has most of the pipelines, but there's lots of other places to reach. And in order to do so, Brazilian government wants to change, especially Petrobras and all the Brazilian government and the agencies want to change what we had before, because before we basically did have one monopoly for most of the natural gas trading and transportation and receiving and consuming. Basically were done by Petrobras, basically the only company that did this project. But now there's lots of regulations that's been changed in order to receive a more open market. So basically, there's lots of companies inside Petrobras were sold, and now we have a more free market. So basically, lots of companies that basically trade and transport and stuff. But what we're doing is this open economy gives lots of digital problems, digital situations that need to be tackled. So basically, especially about the accountability of the gas, or accountability of all the transactions that happen inside the pipelines, and because now you do have multiple agents. But there's a new situation that needs to be tackled. It's about the climate change. So right now we need to be concerned about all the situation, all the ESG problems that arrive at. So basically, we need to mitigate the problem with fossil fuels and non-renewable sources. So we need to change it to renewable sources with more options for energy generation, reducing gas emissions, especially trying to reduce the greenhouse effects. Using, of course, some of the waste, some rest of some productions that we do have all around the world, and we are here. We're going to tackle especially a special renewable source for biogas, especially biomethane, that's being developed here in Brazil. So that's lots of benefits that you can find when you use biomethane, especially a low carbon footprint, so an easier transition from fossil fuels. You can use your waste that's being discarded, and also you can integrate with the grid. And that's especially interesting because, as I told before, we're trying to trace and to manage all the natural gas inside the pipelines, and biomethane is going to be injected inside the same pipelines in order to mix, and of course to have a new renewable source inside this energy generation with new job opportunities. And so that's lots of impact about decarbonization right now here in Brazil, especially we can think about more than 3 megaton of carbon CO2 per year, and that's the average consumptions in refineries in Brazil, that basically 5.4 millions of cubic meters per day here in Brazil. And we can find this reduction when you use biomethane. We can reach up to 95% of reduction when we compare to the fossil fuels. And it's just a matter of comparison. 1 million of cubic meters can reach 1.7 tons of biomethane. So basically, it's a distributed market, as we can see right now. And as a distributed market, it's very difficult to manage because you have lots of actors to access the certified producers, because all the biomethod need to be certified in order to reach the pipelines in a proper way. And that's that's a lack of trust, because sometimes when you produce biogas, it needs to be trusted in order to be used. And that's another sense of a focal point for commercializations, and some lack of guarantees for messages. So basically, the Brazilian biomethod markets has been reached only 2% of its potential, and it can reach a huge environment impact, up to 1 million ton reduction of CO2 per year. And we can basically see that up to 2030, reach up to 4 billion cubic meters per year. But right now, what colleges have been doing so far? We've been especially using reaching all the legacy systems that are available so far, in order to integrate them and to create basically all the processing of all the transactions around the natural gas for inventory, but also all the process in order to reach and to create and to use and to retire the carbon credit tokens. So basically, there's lots of legacy systems, but there's also lots of spreadsheets that's been using around this market, sending sometimes over email, sometimes over some kind of FTP or some old legacy, old technology. So basically, our mission is to change everything in creating a really big distributed data bus using Hyperledger artifacts, Hyperledger Foundation artifacts, in order to make this data bus and to make all the proper transactions to work as they should. So basically, a little bit of the workflow that we do have around the natural gas. That's basically some contracts around the pipelines that inform the herald all the availabilities, and after that, all the actors inside around this process make the programming and confirming and so on, in order to inject the gas and to consume and to withdraw the gas at the end of the pipeline. So all these transactions are being architected around the blockchain network that's being developed. And also for the biomethane trade workflow, that's all the trading around the creation of the biomethane, and also the creation of the carbon credits using certification institutions, some companies that's being certified in order to assure that the productions have been done in the proper way, all the biomethane stuff, and to create also the biomethane lots, and also the carbon credit tokens, in order to offer, sell, buy, and also retire at the end of the process of the carbon credits, retire out of them using the platform we've been doing so far. We've been developing blockchain solutions for that, using, of course, all the benefits of the blockchain in order to create all the process and all the transaction, and lots of impacts in order to monetization, long-term contracts, real-time buy and sell, real-time accountability, process reliability, all the sustainability around the Agenda 2030, transparency, innovation, and all the ESG benefits for renewable energy sources, sustainability, and governance. So basically, we are GoLedger. We are basically been doing that so far, and that's some milestone that we're reaching right now. Basically, all the process the platform for inventory has already been done. It's over right now. We are reaching the market, and the biomethane is being up to 30% right now, and we're going to market probably at the beginning of the next year. So, and at the end, both platforms will be integrated. So basically, the inventory platform GoGas is going to be integrated with GoBiomath and using some technology for connecting around chains, about blockchain, probably some atom swaps, or maybe some bridges. So basically, we are studying this right now in order to reach the market with all the proper technical artifacts, so make it work perfectly. So basically, a special thanks for everyone that's been around this project, especially ANP and Petrobras and Sebrae, and that's it. Thank you so much.
Thank you, Marcos, for that interesting introduction to GoLedger and your work on GoGas and GoBiomethane. I hope the attendants found that insightful, and please feel free to reach out to GoLedger to understand their services. I believe, Marcos, you'll be traveling to the US this fall. It's going to be an opportunity to set up some meetings. In respect of time, let's move straight on to the next presentation by Daniel Norkin from the Guardian Management Service, and I'll leave it to you. Thank you.
Thank you so much. Appreciate everyone. Great presentation, Marcos. And Tanvir, thanks for organizing this, and Bertrand as well. I'm Dan Orkin. I'm one of the co-founders here at Envision Blockchain, and we're just going to dive right into it. Today, we're going to be talking about revolutionizing carbon markets, and we're going to introduce the Guardian here. One second, sorry about that. So just a little bit about Envision Blockchain. We opened up in the early part of 2018, and we are custom application builders in the Web3 space. We focus on guiding organizations through 3 major milestones on their Web3 journey. So we help them out with use case analysis, proof of concept development, scaled deployments. Over the past 2.5 years, actually, we've been joining forces with the HBAR Foundation and Swirlds Labs, and we're the builders and maintainers of the Guardian. I'm going to explain what that Guardian is as the presentation continues. Before I get into the Guardian specifically, what I want to do is just provide the audience with some background in the carbon markets. So within the carbon markets, we're talking about the landscape of environmental sustainability. And as you heard in Marcus's presentation, there's a concept that's really making waves here. It's called carbon offsets. So kind of imagine this, if you will, that every time that there is a project that takes significant measures, whether it be in afforestation or adopting eco-friendly agriculture practices, there's documentation which is happening. Part of the life cycles you could see right here in this on the slide. And the documentation is in progress. And this documentation isn't just a formality. It actually undergoes scrutiny by a multitude of external professionals, ensuring that every claim is genuine. And upon the successful verification, these projects receive this carbon credit or this carbon offset. It's a tangible testament. They actually have something that's a testament, again, to the positive environmental impact that their project has done. And this isn't just symbolic, it has real world value. And corporations, specifically in their pursuit of showcasing their environmental responsibility, acquire and utilize these credits and offsuits. And in doing so, this is not just for their projection of their image, but they're directly funding and propelling more sustainable ventures. And this creates a cycle so that each iteration contributes to a healthier and more sustainable planet. And when we're discussing initiatives like carbon capture or sustainable farming, just understand that there are these cogs that are in this sophisticated machine, and each is playing its part towards the global environmental sustainability. And if we dive further into environmental responsibility, we encounter 2 pivotal carbon markets. One of them is regulated and the other is voluntary. And the former, the regulated, encompasses systems like cap and trade and carbon pricing. It operates under these regulations, if you will. The other one, voluntary, this is where enterprises proactively purchase these carbon credits or offsets, basically acting as a signal for their environmental commitments. And ensuring the integrity of these systems are these standards, or these standard bodies, as you could see. They act as gatekeepers, if you will, creating guidelines, endorsing methodologies, and actually managing the credit registries themselves. Dominating these spaces, we really have three entities that are kind of the largest in the space. We have Vera, we have Gold Standard, and we have the UNFCCC, the CDM library. It's important to note that the driving force behind these markets, of course, are businesses. With an eye on sustainability, they're working to lower their carbon footprint and, basically setting their environmental benchmarks. However, with every business, as you can imagine, some of them are going forward rapidly and others are trying to be more cautious. But basically, to summarize with these carbon markets, there's this real strategic convergence of regulations, initiatives, and aspirations. But it's all, again, aimed at this, the greener future of what we're talking about. Of course, with everything, there's issues and challenges. So as we navigate these new markets, there's some uncharted territories, as you can imagine. It's kind of like we're going on this ocean. We have a boat, but like the compass doesn't exactly work. So we're faced with methodologies, again, that the methodologies might not always hit the mark. And sometimes the benefits that we expect are magnified more than they can be. People are lying about the results. And it's not uncommon to see issues like double counting or even just straight up fraud. And with so many players that are in the field and so many programs that are available, the data that we rely on can sometimes be murky at best. And the paperwork is also not crystal clear. And of course, with anything, trust is absolutely paramount. And these are some of, the challenges that we have, which, with every challenge, of course, we have some opportunities on the horizon. And that's where we want to introduce the Guardian solution. So the Guardian solution presents this solution to the issues and challenges that I was just mentioning, because we're really embracing the digital age over here. So we're streamlining with the Guardian the entire process from monitoring to verification, making it both efficient and transparent. Basically, you can imagine a world where our data is backed by the reliability of a public ledger. With this case, it's the Hedera public network, and it's trustworthy and unchangeable. But we can take it even one step further. By tokenizing carbon offsets and emissions, we're ensuring that every piece of data, every timeline, every verification status is encapsulated and easily tracked. This means that there's no more double counting and complete clarity on every offset's journey. And right here, you see the screenshot of this policy workflow engine. And that's where we want to introduce the policy workflow engine. This is kind of the core of the Guardian itself. So the policy workflow engine offers a streamlined process where roles are distinctly defined using decentralized identities, DIDs for short, and each step is meticulously aligned with industry standards, like the standards that we mentioned earlier, ensuring that there's validation at every step, at every approval, and at every turn. We can further enhance this with introducing these concept of schemas, which are designed to accurately represent and automate all of the complex methodologies, thereby simplifying the entire calculation process and all the process which is needed for actually inputting parameters that these methodologies are asking for. From this system that we're looking at right now, we can tokenize offsets and emissions, and we can mint them and create them, thereby creating this environmental digital asset. What's really interesting is that at the heart of this ecosystem, there's 5 key technologies that enable us to deliver this trusted and transparent solutions that we can use for the carbon market. First and foremost, as I mentioned earlier, we use decentralized identifiers, which are DIDs. By using DIDs, we can ensure the carbon credits are issued to the correct party, and then they cannot be duplicated or manipulated in every way. And for every approval, we can trace back to who actually made that approval, thereby showing some more accountability. Secondly, we use verifiable credentials, and verifiable credentials, VCs for short, are very simply put, they're just digital documents, and they provide information that's related to the subject or the issuing authority or the type of credential or the specific attributes about the subject. And this evidence related to how the credit was derived. And by using the VCs, we can ensure that carbon credits are issued only to those who meet the necessary criteria, and the credits themselves are valid and trustworthy. Third, we use verifiable presentations, or VPs, and VPs are used to present one or more verifiable credentials. Fourth, we use the public ledger Hedera, which allows for public discoverability of every asset and every digital document, so that everything could be seen, audited, and there's a whole list of business models that I'll show you on the next slide that come from having this public discoverability that you can't get without using a public ledger. And lastly, what we just covered in the previous slide was the policy workflow engine. You could use either the UI or APIs. It's kind of this low code, no code type of tooling, if you will. And on the right, you see this video that keeps on looping over and forward. And this is an example of what we call the trust chain. This is like the bottom line for the Guardian, where it's a crucial component to the fully auditable ecosystem. This trust chain allows us to track who did what from the very beginning of the workflow to the very end. It's essential for maintaining transparency and trust in the carbon market, as well as streamlining the whole verification. Just a little bit about the Guardian's adoption and where we are today. So there are over 100 projects that are using the Guardian currently throughout the Hedera ecosystem right now. We launched the first open source code of the Guardian in early 2021. And there's a number of companies you could see listed here that have become involved as contributors to the open source Guardian. But what's interesting is by digitizing these assets, or these tokens, if you will, there's a whole plethora of business models that really come from that. So the Guardian is the core. And once we have the Guardian as the core of the ecosystem, there's business models that are coming up from the open source world, such as policy creators. There's standard registries, there's new standard registries, there's exchanges, there's MRV solutions, there's refi solutions, there's carbon forward platforms, reporting solutions, explorers, wallets, and there's so much more which is happening. Again, just to give a quick little hint as to the type of usage that the Guardian has been accumulating over the past 5 months on the Hedera testnet, we have over 1,800 DIDs that have been issued. There's over 686,000 verifiable credentials issued. There's over 194,000 verifiable presentations issued. There's over 3,300 standard registries that have been created. And from there, there's 2,600 policy users. There's been over 9,600 digital methodologies that have been created. So within Hedera, for those that aren't familiar, there's something called topics, and that's where you send information to. So there's been over 12,500 topics created. And within those topics, there's over 241,000 messages that are sent. What's really interesting is from the tokenization side. So you can, for those that understand, you can create tokens, and then once you create them, you can mint them. So there's been 361 fungible tokens created, and there's been a whopping 181 billion fungible tokens that are minted. That's on the emission side of tracking. From the NFT side of things, we have 3,415 NFTs created and over 3.9 million NFTs that are minted, which again, the NFT side represents the offset side. So just to wrap this up, I know that we're short on time. I think I was able to cut this down from 20 minutes down to 12 over here. I just keep looking at my clock. We have two versions that are available. We have the open source version that our team is currently the builders and maintainers of. It's available to use, so fork it and use it immediately. You can go to github.com/Hedera/Guardian. And in Vision Blockchain, we also have a hosted version, which is the Managed Guardian service, which is live in the free beta period. You can go on board now for free at guardianservice.io. It's a hosted environment where, obviously, because it's hosted, we give you all the resources, tools, and support that you need to get started. Obviously, since it's a SaaS product, you have benefits such as reliable uptime, 99.9% SLAs. You have multi-tenancy for all of the different instances that you want to create. And then obviously with heavy MRV streaming, it's important to have auto scaling that kicks in once thresholds are met. So we provide that scalable infrastructure as well. So this is just a high level, and I'll save some time for the Q&A as well. Over to you, Bertrand. Thank you.
Thank you, Daniel. That was a great introduction overview of the Guardian Management Service. So as far as the Q&A is concerned, I know we had a cutoff at 12:30. I'm happy to cut it short here, depending on the format and how you want to move forward, Tanvir. So you can move on with.
I really appreciate you guys trimming it a little bit so we are back on track. If there is a question from the audience, just see if there's anything here. Bertrand. Otherwise, we'll be good to go.
Okay. I don't see anything on my side.
While you do that, Daniel, I'm a big fan of Hedera. I was at the NFT conference in LA last year when one of the VCs on stage, he was saying how he had invested $1 million when with Vitalik when Ethereum was at 30 cents, right? And then he spoke about Hedera, and that's when I noticed. And I think Hedera's doing things very differently. So I really appreciate that. I'm hosting the CEO of Toko, which is a Hedera and partner, part of DLA Piper, for a Hyperledger meetup September 13th. So I really look forward to that. And yeah, we'd love to get you guys involved for some of our Hyperledger meetups in the future, Marcos and Daniel. I think you're on mute, Daniel.
Yeah, sorry about that. Yeah, happy to meet up and for sure, would love to get involved. Thank you for the offer.
Really appreciate you guys joining us, Bertrand. Thank you for putting this together, and I'll follow up with you subsequently.
Thank you, Tanvir.
Once again, a quick note of appreciation to the folks at Hyperledger. David Boswell, he really helped me in introducing us to speakers like Bertrand, and Bertrand, putting me in touch with Marcos and Daniel. And then we had Marvin earlier from the Hyperledger Capital Markets Group. So big thank you to Hyperledger for their collaboration. Now we'll switch gears. Really excited. I was really looking forward to this presentation. It's a topic that is very dear to me, which is the adoption of blockchain and tokenization. Tokenization specifically, right? Whether it's in the enterprise or within the business world, right? And we have a highly accomplished speaker who's going to do the talk. She is from Consensus, and it's a company that doesn't need much introduction. Anyone using MetaMask, that they are the creators of MetaMask and other great products that they're building in Web3. Nayana Singh is the general manager and head of product at Consensus. She's had a great career working for companies like Motorola and Microsoft, heading strategic projects and in program management, and also being a product leader. And she's been with Consensus now as their GM. Her talk is on what's driving adoption of tokenization projects. It will be a fairly high level overview of what's happening and how hopefully she'll address some of the things being done to overcome some of the hurdles as well. So look forward to her presentation. With that, I'd like to turn over to Nayana. She has an MBA from Booth School of Business. Had a great interaction. Over to you, Nayana.
Thank you so much, Tanvir. That was I hope I can live up to that wonderful introduction. Can everybody, before we get started, two things. Does anyone know, you must be going back to back? Are we okay, Tanvir, to just get started?
Yeah, absolutely. We'll probably try and do a bio break after you're done. So please continue.
All right. And second, can everybody see my screen?
Yes,
can everyone
see
see my picture? Okay.
Yeah.
All right, just wanted to do a tech check. Well, thank you so much, Tanvir, for the opportunity to speak to everybody here. I loved the previous presentation. I think Daniel did a great job actually talking about some of the specifics, and I think set the stage up, if you will, to talk about why tokenization is so important in the Web3 industry, as well as, I think to the future of industrialization, if you will. As Tanvir gave an introduction, I won't speak a lot, but there are a couple of things that I do want to mention from my background perspective, especially if people made the jump from Motorola to Microsoft to Consensus. I actually worked when I was in Motorola, I was leading this charter. Back in the day, I was a systems architect. I started my career as a developer, and we were working on Web3. And this, I would say, and I am dating myself with this information, but this was back in the 2007, 2008 timeframe. When Python, as an example, was still being developed. Believe it or not, like some of us contributed to Python. And we were thinking about, well, what does Web3 mean even during that time? So I was very, very interested right from day one on about how you actually transition from a world from Web 1 to Web 2 to Web 3. And in Microsoft, my career has always taken me to, setting up new businesses. How do you scale up new businesses from an idea to ideation to scale? And so for those of you who are interested, you can take a look at my LinkedIn profile. I've worked in many such businesses, and one of these businesses was with the Web3 business. And Microsoft back in 17, 18.
Hey, Nayana,
Sorry,
I lost you for a second.
No, someone muted me. It said someone muted me.
Sorry about that.
So big companies like Microsoft were actually looking at and still continue to look at Web3. Back in the day, there was no tokens were just coming up in blockchain, and we started looking at what is some of the most fundamental aspects of technology that the companies can use. And believe it or not, we started looking at tokenization, and we actually developed a service. And Microsoft holds a number of patents around tokenization, whether they are non-fungible, based on fungible or non-fungible tokens, and that IP really working on all of these new technologies really developed my interest in what we can do within Web3, especially within that in the tokenization space, and that really what's helped me make the transition from a big company like Microsoft to Consensus. And the reason I thought this was important for me to mention to this audience is that whether people are looking at it from a consumer perspective or enterprise perspective, tokenization is here to stay. And that I think is really important. The macroeconomic situation, I think right now, is not really conducive, obviously, to a lot of liquidity in the market. So we're, I think, seeing a little bit of a slowdown. I would also say that the hype of the non-fungible token did not help the real life use cases and scenarios. So, I'm hoping, and I think we're seeing in the industry that all of that is going to actually weed out the weak players, and we're going to make the token economy a lot more strong. So with that, let me just jump into what I kind of wanted to talk to you about today. In particular, the first thing that I kind of wanted to talk about is, as we think about tokenization, really there are two things that we need to be to keep in mind. The first one is, what are the drivers that are going to help us here? And the second are, what are some of the barriers to entry and how do we overcome that, right? And before jumping in, and I'm assuming this audience is very familiar with tokens, but I just wanted to do a level set. When we think about the Web3 economy, we're looking at the most fundamental aspects, and I would say the most attractive aspects to a layman as well as anybody from Web 2 is digital assets. And digital assets really are of two types. And both of these two types of tokens are really important, because we tend to separate when we say tokens versus when we say NFTs. We're kind of meaning two different things, but they're all these digital asset types are really tokens, and tokens are of two types: fungible tokens and non-fungible tokens. So starting with NFTs, non-fungible tokens, this is a huge hype. What are non-fungible tokens? They represent physical, digital, or intellectual property, right? So these are unique. They help us verify authenticity, and they help us protect as well as certify ownership. So they're unique type of tokens. What are fungible tokens? Fungible tokens are really interchangeable tokens that are interchangeable with one another. They are homogeneous. They have the same equal value, and each unit is the same as any other unit. So a great example of this is a stable coin, right? Or a cryptocurrency, if you will. And I just wanted to kind of separate this, because just being focused on having spent a part of my career within the token space, I think it's important to get this distinction right. Like, these are all tokens, fungible and non-fungible tokens. NFTs are just happen to be non-fungible tokens. And another pet peeve of mine that I kind of do want to mention, tokens and NFTs are the product, right? When you talk about a token, people are just like talking about what a token do. But really, at the end of the day, these are just the technology. These will be just the technology. So if you look, NFTs is nothing but a non-fungible token. Token is nothing but a specific type of a standard, like an ERC20, right? So these are critical components for the success of Web3, because moving forward, they will form the foundation of the applications that are going to be built on top. But at this point, they're hyped as the product themselves, which I think is a little bit inaccurate. And when people talk about it, and when some of these NFTs and tokens really don't do well, there is a lot of disinterest in the market. But what they don't realize is that Web3 is a new technology, and it's continuing to grow. And the NFTs and token is really just some of those standards that are going to help build out the applications of the future for tomorrow. So let's take an example of the type of different tokens, right? And this, I think I just kind of wanted to spend a little bit of time here today, because here we can also talk about what's happening in the real world before we actually start to think about the advantages or the disadvantages or the barriers that exist in the tokenization world today. So tokens in Web3, they're the foundation that hold a lot of potential for the future. Like, not only for, I would say, the financial architecture, but, it just forming the infrastructure of many of the systems. The most well-known token are Bitcoin and Ethereum, right? Like, these are currencies, or even the USDA token, right? These are currencies that we can buy, we can sell, we can trade, and they're very well known. But there are also many other examples that, of course, people who are very familiar with the Web3 world would know. But the reason why these are going to continue to grow in importance and the property. So for those of you, some of you may not be familiar, but the St. Regis Aspen Resort back in a few years ago actually was thinking about what is the way that they can actually open up their infrastructure, if you will, and ownership to a broader variety of people. How can they help these people self-select and take advantage of their portfolio? And what they did was they tokenized a portion of its ownership using blockchain. And this really allowed the investors to purchase tokens that representing the fractional ownership in the hotel, right? This allowed them to access potential rental income and take advantage of the capital appreciation. And this is really important, because this is very similar to how today we buy Bitcoin or Ethereum in the same fractional way as well. CryptoKitties is a great example of another blockchain-based game where the players could collect, breed, trade these virtual cats, etc. Right? For those of you who are familiar, Spice VC Fund is a venture capital fund that tokenizes its ownership shares as security tokens as well. There are so many commodities that fall into the categories. The Paxos Gold is a great example, right? Paxos is a digital token that represents the ownership of physical gold. Each of the token is backed by a 1 fine troy ounce of a London good delivery gold bar as well, which are stored in the vaults, by the way, right? So the investors can trade and buy, sell, and trade gold without actually the need of physical interaction, if you will. In the gaming and the virtual worlds as well, Decentraland, as in the next slide, I'll talk about it a little bit, is an example we typically used for representing when we talk about NFTs. We talk about gaming in a pretty big way, right? Because NFTs tend to represent a lot of assets within that. But one of the things that you can that's important to note is in gaming, NFTs are famous, but it's also underpinned by a token or a fungible token. So where the users can say buy, sell, develop parcels of virtual land, and in this case, it happens to be through the ownership of their Mana tokens. And the ownership of land is represented. Now the ownership can be represented by NFTs that allows users to create and monetize. But this is a really interesting byplay to think about, because you kind of need this interaction of the tokens and the NFTs in a very meaningful way. Supply chain is seeing a lot of tokenization. I would say Starbucks, Walmart, and IBM Food Trust are getting into this. For transparency and accountability. I think Starbucks has published a farm to cup. They're using farm to cup as if in a big way, and the back end of the supply chain is tokenized, so a user can actually see where the cup of coffee that they're drinking, where is that coming from. Again, that is done through the interplay of both tokens and NFTs. Daniel, as he talked about the energy and carbon credits business, right? There are so many foundations that are such as the Rainforest Foundations, etc. UK are using tokenized carbon credits. The carbon credits and carbon offsets are tokenized as well, so that you can exchange them and you can buy and sell them, you can trade them, etc. So with some of those real life examples, let's also take look at some of the endless applications in the various industries for NFTs. And I want to spend a little bit of time here as well, again, because when people talk about NFTs, they're really just scratching the surface, because what captures everybody's imagination is some of the scenarios around gaming and trading of digital art and collectibles. I think that particular hype played a very important role in making tokens and NFTs famous. So I would never discount that. But I want to say that there is more to Web3 tokens and NFTs than what we see. Yes, NFTs are widely used to verify the ownership and authenticity of digital art and collectibles, such as digital paintings, illustrations, even tweets. And this has opened up a lot of business models for creators to monetize their digital creations. Absolutely, the same thing can be seen within. The same can be applied to gaming and music artists, right? Where in gaming, NFTs are being used to represent in-game items such as weapons and armor and skins, and these can be really just bought and sold and traded like real-world assets. And this allows more opportunities for gamers to own their digital creations. And I think over time, I think what would be really important would be that this will allow not just the gaming companies, but also the gaming developers and the gamers themselves to have a lot more skin in the game and take advantage of the different business model. Same thing goes for, owning virtual real estate, as we just saw in companies like Decentraland, etc. Music and videos, the NFTs are used in the music and the video industry for the same authentication and ownership and distribution rights as well. Sports and memorabilia. But how many of you know how NFTs are actually being used and tokens are being used in healthcare? Clinical trials, they're starting to look at how to track the movement of medical samples and data through clinical trial processes. This is really important because it provides a secure and transparent record of handling and the analysis of samples, right? It allows for ensuring the integrity of the data and to improve the trust in medical trials. Medical records, and all of us know how important medical records are and how important is the security and privacy so they don't get into someone else's hands, or even actually understanding like medical industry. So how do you store these records? What if these records could be NFTs? What if you could provide the patients with greater control of their personal health and information while keeping it secure and private? This could allow for reducing the risk of breaches on unauthorized information as well. Scientific research is also looking at NFTs where they can track the provenance of scientific data to ensure its authenticity. The drug supply chain, just like any other supply chain, is being looked at to track the movement of these products, in this case, the pharmaceutical products, through the supply chain. And this way you can have a secure and transparent record of its handling and distribution. I could kind of go on and on here, but I think one other thing that I want to say that there's been a lot of development is essentially the use of tokens and NFTs in loyalty programs and ticketing and access control, etc. The idea of spending some time talking about some of these applications is to say that where there is a lot of interest, where there are real life use cases and pain points, there will always be continued innovation. There'll be innovation on the business side and there'll be innovation on the technical side. And this is why I think this is not just a trend. This area is here to stay. And this is why I had a slide that kind of talked about that. So far, we've always talked about NFTs and tokens as the product. But frankly, it isn't a product. They are the underpinning technology that's going to allow us to have these endless applications in all these different industries. If you guys have any questions, feel free to share them on the chat. I can take a look at them at the end of I'll keep a few minutes and I'll take a look at the end, and I'm happy to talk. The idea and the focus for today's session is really just to talk about the breadth of what tokens are, what tokenization is. And then I think we can, and then I think when we're all on the same page as to what tokenization and NFTs are, what are the advantages, then I think we can start to have then the creative juices start to churn in terms of, well, how could I take advantage of not only what other companies are doing and how they're leveraging, but then also, how can I avoid some of the pitfalls while taking advantage of this new technology? So now let's take a look at some of the benefits of tokenization. And I was thinking about some of them. I tried to put the most relevant, important ones here, but I promise you there are more. And the first and most important one, I think, is the idea of fractional ownership. When I started getting into Web3, one of the biggest concerns for people was that, well, I don't have the money to own a Bitcoin, or an Ethereum coin, right? And that's the biggest advantage, I think, is we think about, when there are stocks and shares, etc., that people they're not able to buy. The fractional ownership is the single most important benefit that tokenization has brought to us, right? Tokenization allows the assets to be divided into smaller units or tokens, and this lowers the barriers to entry for investors who really can't afford to purchase this entire asset. And it doesn't matter what this asset is. It could be a currency, it could be a piece of real estate, it could be artwork. And this is what really increases the liquidity, if you will, in many markets as well, right? Global accessibility, if you look at it, is really critical, because now these tokens, because they're digital, they can be accessed and traded anywhere. They can be traded 24/7 without the limitation of the traditional trading hours or the geographical boundaries, if you will. And this expands the investment opportunities from an audience perspective. Traditional assets like real estate or private equity or collectibles can be illiquid sometimes, right? So it's very hard it's not that easy to sell them, if you will, sell them quickly in particular. And so with tokenization, secondary markets can be opened up where they can be traded and potentially increase their liquidity and reducing some of these exit barriers, right? And this is one of the big reasons why a lot of the new companies are looking at ICOs instead of IPOs, if you will. The blockchain-based tokenization brings a lot of streamlining to processes like asset issuance, asset transfer, and settlement. This reduces a lot of complexities, like administrative complexities in particular, the paperwork, the intermediaries, and frankly, it lowers costs and increases efficiency. Transparency, again, is a very key advantage here. Transactions on the blockchain are recorded in an immutable and transparent manner. And, so it's very hard. I mean, I wouldn't say anything is fraud free, but this immutability allows for a lot of transparency, right? You know exactly what happened and when it happened. So this provides a auditable trail for asset ownership, transfers, and history, which enhances the transparency and reduces fraud. And this is, I would say, a big, depending on what kind of industry it is, different industries are looking at different specific benefits of tokenization and are entering those spaces, right? So if I look at big companies like Starbucks or IBM, etc., they're not getting into it, for instance, tokenization for fractional ownership. They're getting into it for global accessibility. They're getting into it for efficiency. They're getting into it for transparency, etc. Automated compliance is also really important in many cases because the smart contracts can be programmed to enforce compliance with regulation and contractual terms. So as we actually start to look at the future, this becomes really important because the enforcement of rules as it relates to different things like dividend distribution, voting rights, etc., is easy as well. And reduced intermediaries, right? You don't need multiple intermediaries such as brokers or custodians or clearing houses. So it means that this can lead to faster, more direct interactions. And last but not the least, interoperability. All these tokens are built on standards like ERC20, 721, 1155, and these can be used across different blockchain platforms and applications. So you're not really, over time, we'll see this become smoother and smoother through, L2s and the bridges, etc. But I think this is really, really going to drive a truly decentralized system. Last but not the least, we talked about this, but innovation in business models is really what's causing this to take off from a consumer perspective. Now, all of a sudden, tokenization has opened up a venue for all the non-intermediaries, right? If you are a creator, you have content, doesn't matter what the content is, there's a way for you to monetize it, whether through the enterprise or whether directly for the consumer, in different ways. And enhanced fundraising, as I said, is also a part of enhanced fundraising, new business models. They all kind of, tie in together through ICOs, security, token offerings, etc. So ownership transfer, all of these are like so many more benefits that we can continue to talk about. But in the interest of time, let's move to a couple of other topics that I wanted to touch on as well. So how do you take advantage of some of these? Like, there are some fundamental challenges that are facing us today, whether you want to build it, whether you are a creator, whether you are a developer within Web3, and whether you're just looking to tokenize your application or your scenario. And I want to talk about some of them. There are so if you look at it, the few that we won't talk about all of them here, but I will say that there is more work. The barriers can be divided roughly into three categories, right? The first one is a technical limitation. you know what, there is scalability of the blockchain networks. It could be a technical barrier sometimes because, you know, the high transaction volumes and network congestion can hinder the efficiency, right? Scalability is a problem. Interoperability is being worked on, but isn't quite there yet. Similarly, when we think about the smart contract, there are some limitations there, right? The smart contracts are which govern the behavior of the tokens both have complexity in terms of functionality as well as security that can impact some of the tokenization process. There are many companies that are looking to overcome this. This is why we've seen so much development in the infrastructure space. Companies like Consensus, especially through the Infura platform, are working to address this. Then we have the issues around security vulnerabilities and the privacy vulnerabilities and the regulations, right? And again, companies and products like MetaMask are working very hard, both at the infrastructure level as well as working to reduce some of these complexities. Like the tokenization projects in many ways are facing security risks, such as potential vulnerability in smart contracts leading to hacking attempts, how to prevent unauthorized access to tokenized assets. There's a lot of work being done here to digital identity space, etc., to prevent a lot of this. Tokenization involves storage and transfer of sensitive data, and so data protection. How does the government play a role in this? What can be regulated? How should it be regulated is important here as well. And last but not the least, I think the user experience leaves a lot to be desired right now, right? Like there are a lot of efforts being made to improve this, but until the user experience for whether you're trading assets, whether you're using assets, whether you're playing a game, whether they can be at par with Web 2, I think, you know, we will not see as much adoption. So user experience certainly plays a big bridge in terms of the barrier that we actually feel, because many people who are looking to, and many entities and many enterprises that are looking to tokenize their scenarios or tokenize their assets are prevented from doing so because it's not easy, right? Like when you play a game, so very simply, when you play a game, if the gaming experience isn't seamless, if it isn't a very, like, you know, if you're still the buying process of your NFT sword, for instance, takes you out of the game, and you have to go and sign into a new wallet and come back, and it's just really hard. It isn't seamless. So how many users are going to actually continue with that particular game? So similarly, if you're going to if you had one place where you could both trade your regular assets as well as your digital assets, then the process is going to be very seamless. So ensuring that a seamless and user-friendly experience for participants is not only a technical challenge, but that intuitive interface and efficient process is really important for people, for mass adoption, and if you will, for crossing that chasm. So those are some of the things that we've seen. There's a lot of work going on with companies. I mean, I'm shameless plug for my company Consensus, that's doing a lot of work here, both in terms of, you know, how you as a user can take advantage of these assets and how you can trade them seamlessly. MetaMask needs no introduction. Infura is the backend platform the infrastructure platform that not only allows you to stand up an application of yours, Web3 applications within a day, but it allows you seamless interface with MetaMask. And finally, also diligent. Every single smart contract you read is, as we talked about, is immutable. So there's a lot of work being done on fuzzing and auditing and just the security aspects of some of these that I think are important, that behoove the companies to choose their platforms wisely, if you will. So that was my little talk on tokenization and assets. I want to pause there to see if there are any questions. I can answer anything for you. I'm also happy for you to connect with me on LinkedIn, and we can also have a chat. I I know we're out of time, but we can also have a chat at a later time.
No, that was a beautiful talk. You covered so much in a short time and very well articulated. I'm very eager to ask you this question. I'm a Lord of the Rings fan, and there is one ring to rule them all. So will we have a one wallet that is going to rule them all, or what is your because we have so many wallets to deal with nowadays, right?
I think a great question. You're asking someone who actually works for MetaMask. So I would say it would be great. But I think the concept of Web3 is, I think this is where web interoperability comes in, right? And this is where I think the industry right now is fairly distributed. So I think over time, we will see that there'll definitely be some sort of consolidation. And I think it's up to the consumers to decide where, at the end of it, it's going to boil down to ease of use. What is the wallet that will seamlessly integrate and give you the experience you want? And I think that wallet is probably going to win the game. And I would say it's similar to what we see in the browser market. There are multiple browsers, but there are only one or two browsers that people really use in a more meaningful way, that companies want to integrate into a meaningful way, if you will.
This is great. Now, this would have been actually a perfect opening keynote, but we had speakers from India and Europe that went ahead of you. But love for you to come back again and speak at TokenExpo, if possible in person or at least virtually. And I'll definitely follow up with you. Thank you so much for joining us. Really appreciate it, and we will be in touch.
Thank you so much. Thank you for the opportunity.
Take
Have a wonderful rest of the day, everyone. Thank you.
Take care. Thank you. Bye-bye. All right, folks, we are actually, 2/3. It's been a great audience. I think every session of ours has had anywhere from 25 to 40 people, and I know it's been a fairly it's a half-a-day event. Maybe in the future we'll trim it down to a smaller time frame. Before I introduce the next speaker, who's the co-founder of Protofire, I do want to share. So we have 3 sessions left. 2 of them. One is going to cover how some of the world's largest brands like Nike and McDonald's and Starbucks are leveraging Web3 and Metaverse. And we'll end with a VC talk. Someone who's invested over $100 million in Web3 gaming, do a talk on the future of Web3 gaming. But before we do that, I'm excited to bring up the co-founder of Protofire, Renat Kasanhin, who's going to do a talk on leveraging tokenized real-world assets as collateral for lending and DeFi. I think it's a great use case. Also, because of scheduling, we couldn't club some of these use cases together, but really excited about Renat's presentation. For those of you who are not familiar with Protofire, they help many businesses transition into the world of Web3 and accelerate crypto adoption. And they've deployed solutions leveraging Web3, DAOs, and protocols. Renat will be able to share more. Without further ado, over to Renat.
Hi, everyone. I'm Renat. Will share with you the lessons learned over the last 4 years in the DeFi space as we back then began using real-world assets as collateral, and how the space matured, what changed, and what opportunities exist. I will ask you to help me tailor my impromptu walkthrough of the state where it is. It's quickly, dynamically changing, but if you can put into a chat, what are you working on? Do you have any assets that you want to use as collateral in DeFi and borrow against it? Using those examples from you, I could make my state of real-world assets as collateral and opportunities to be more tailored towards what you need and how it can help you with the projects that you may be already working on or considering. So we'll look forward for your examples of what kind of collateral that you would like to use to borrow against. Please put it in the chat. While I will start with an introduction of my story, how I got involved with with real world assets as collateral in DeFi. It was actually started way before I thought it would ever be possible. It was in 2016 when I went into crypto. It happened that I got this crypto bug and went, how we say, down the rabbit hole and went full time in it and into it. And so it was in 2016 when I found myself on a coin fund early interviews on YouTube that Jake Brookman was making with a few early crypto projects. And one day I ended up the same place as he was, and we had to take that call. And so it was a hangout we recorded for YouTube with founding members of MakerDAO. Back then, MakerDAO was not even live. It was just one of the many projects with great ideas out there in the space. And so that was the day when I learned more about underlying complexities of a system, which is today known as a kind of a gold standard for collateralized debt position type of DeFi protocol, CDP, short abbreviation, right? And back then there wasn't any collateral in the crypto space, any borrowing. There was no DAI or USDC. There was no Maker or like live on chain, right? Or Compound or Aave, right? Most of the individuals who started those projects were at the time just designing ideas and attending events to share what they want to build on, right? Like Stani Kulishov from Aave. Back then there was no Aave. It was called by the original name ETHLAND. As far as I remember, Compound was not even in the picture, right? And so couple of years forward, the DAI was preparing to launch, but it was a single collateral DAI. And a couple of years after that, that grand vision of Maker was coming to fruition, and we finally were at the point where a multi-collateral DAI would be launched. And so it was extremely exciting for a lot of people. And so what we did were waiting in anticipation for what kind of collaterals can we add onto Maker, which at the time had, I think, like a few $100 million worth of DAI minted, and maybe $1 billion or so of collateral. And then when the multi-collateral DAI launched, right, the question was, okay, what can we add as collateral to make the system more stable, right? And the real world assets was the answer to a huge problem we had, which is every time the price of crypto would go down, right, we as let's say as Maker holders would all like be extremely scared, because should the price go down very fast, and the liquidations of collateral, if the debt would not be repaid, right, then the system would allow the liquidations to occur, right? And if the price goes down so fast that liquidators cannot keep up with liquidating, right, then we would have a bad debt accrual event. That's how I call it now, right? Where the shortage of amount of debt versus what the asset is worth. Let's say something is dropping from, let's say you deposit $1 million worth of Ether, right? You borrow, let's say 800,000 worth of DAI. And then Ether keeps dropping. Now it's 900, now it's 850, right? And if liquidations don't occur fast enough, right, then we may end up in a situation where we only have like $600,000 worth of collateral, while the debt is still 800,000 DAI, right? And the shortage, the difference between those two numbers, 200,000, is the bad debt, right? Insolvency of this amount. And so because of the ETH was very volatile, the multi-collateral DAI presented an opportunity to add some collaterals that do not go down in price the same day or time when ETH goes down in price. So that was the origin of the hunt for uncorrelated assets in the collateral or multi-collateral DAI. And I had an opportunity to wait in line until multi-collateral DAI was to be launched, to participate and play with it as a contributor in the form of basically one of the early interim risk teams, where my job was to, well, not the job, I volunteered for the role of contributor and was given a collateral, right? And collateral was account receivables, invoices. So my responsibility was to calculate stability fee, loan to value, debt ceiling, and the liquidation penalty, basically the parameters. That's when, if something gets listed as collateral in order for the DAI to be minted against it, right? The parameters need to be calculated and provision deployed, enabling this asset to be used as collateral, right? And based on these numbers, the system knows how much to allow you to mint DAI against this asset, right? And so accounts receivables was that collateral, and 4 or 5 years later, I'm still involved in this space as an advisor to projects that want to get want to list their collaterals in a space. And so I wanted to show you where we stand now as far as what kind of collaterals are out there, what kind of collaterals are growing very fast, and what is missing, and what kind of collaterals that we need more at this point of time and opportunities. So there is a good website called RWA XYZ, where you can see the all forms of like a very one URL. If there is one thing you can look at, it would be that. I would recommend that one to take a look to understand what is the state of real world assets in the form of credit, right? Now, there are two kinds of borrowing that occurs in two kinds of systems in DeFi. I would give two examples to illustrate the two categories. One example would be what is known as a lending borrowing platform or a money market, right? Would be Aave, right, or Compound. This is category one. And the second type would be the over-collateralized stable coins, where examples would be like MakerDAO, right? MakerDAO project, where users could deposit some collateral and borrow against it, right? The core difference between these two systems, while there is a lot of similarities, is where does the funds that you borrow against this collateral, right? Where do they come from? In the case of Aave, let's look at Aave. So in case of Aave, we see markets where you can deposit different assets, like, for example, Ether or WBTC, right? And then you can borrow, right? Let's say you can borrow USDC at 3.4% a year, right? Which is quite good, right? But unlike systems like MakerDAO, this USDC need to be deposited by somebody, right? So if we look at 300 million deposited on this chain, we're currently looking at Ethereum, deployment of Aave v3, right? There's v2, the previous version, right? And there are different chains where the Aave markets have been deployed, where they have their own separate numbers as far as how much was deposited and borrowed, right? So we can see out of 300 million, 257 million were borrowed, right? Which is quite a good utilization. And suppliers earn, those who lend, right, deposit, they earn 2.6%, and those who borrow pay 3.4%. How does this rate is being determined? This rate is being determined on utilization of a pool, right? Which is expressed in the form of a formula called interest rate model, deployed in the form of a contract on Ethereum mainnet, where this contract basically describes how much to charge, right, to those who want to borrow, and it calculates the formula. It calculates the interest rate using the formula that takes into consideration how much was borrowed out of all of the assets of USDC that were available, right? And based on this utilization, right, it calculates an interest rate. So right now we can see that, let's say, at a very low utilization, right, if only a few million dollars would be borrowed, right, interest rate would be very low. Interest rate would be 0.19%, right? But because of more people borrowed, right, the interest rate growing, and the more the pool is utilized, at some point it may reach what is called the kink, where interest rate will start to grow exponentially to signal the holders of USDC investors that, hey guys, we have 33% for those who deposit and lend. It would be like 25, let's say, 30% interest rate that could earn. So it's based on the curve of utilization of capital. And the difference here that if let's say a real world asset would be allowed to be used as collateral, right, you would borrow out of the assets that have to be deposited by somebody, right? If no one deposits anything that you want to borrow, then there is nothing to borrow. Unlike Aave or Compound, which works the same way, right? The MakerDAO works in a completely different manner, where no one needs to deposit USDC in order for you to be able to borrow against the asset, right? Because the DAI is minted, right? And that is what the key difference is. And so as of now, if we look into the various types of assets that exist, for example, in Maker, there is a category called real world assets, right? So if we look at only that part, here's the query you can use to run it yourself, inspect it, right? Anyone can audit the protocol in real time without any permission, right? So that if someone is concerned about like solvency, is there collateral, right? What kind, right? You can go ahead and perform an audit in real time. It's open for anyone to audit the system. So as far as kinds of collaterals that exist right now, we can let's look at the type of collaterals with the highest amount of debt. They called by different MAPs, but in essence, if we just summarize, which is Maker Improvement Proposal, which is a vote that how the new collateral is added, right? Like if we want to list some collateral, we create a vote. Do you guys want to list it? And yes, all right, no. Based on the vote, the collateral is either listed or not. But most of the work is done by different teams that together collectively make what a DAO is, right? You can call them sub-DAOs. Some of them are risk teams, and so out of the
Hey,
different
Renat,
collaterals.
just a time check.
Yeah, all right.
We are almost out of
So
time if we can wrap up.
these are we as of today, majority of collaterals we have are either the largest ones are U.S. Treasuries, MIP 65, right? Then we have private loans like the some in the US started lending, but they borrow out of Maker, right? Then the new silver, for example, it's a real estate backed loans, and trade credit, Fortuna 5. So probably like 5, 6, 7 different categories of assets that are being used as collateral, and that would make what Maker is. Collectively, Maker represents probably $2 billion out of real world assets in DeFi, out of about total of 3 billion. But the category of U.S. Treasuries as a pool has been rapidly growing, and examples of protocols that are in the space where there is lending borrowing going on is Maple. It's more similar. It's of a second type. It's like Aave for some specialty assets, where some pools accept deposits, right? And then some borrowers draw the credit out of them. The centrifuge is the second notable example. Here's examples of their pools, right? There is another big player called Goldfinch. They have recently had one of the first default events out of a credit pool. I think they have lost about 4% in the default of across their portfolio. Well, for those risks, lenders get paid handsomely with a premium they receive as a depositor. Some of these pools, like for example in Maple, they're switching to KYC pools, same as in Centrifuge, right? You cannot become a lender unless you're a credit investor in the US. If you're a non-US, you can go ahead. So there is a bit of securitization and structuring going. Overall, that's kind of an intro of into a real world asset usage as collateral to borrow. If any of you want to learn more how to do pilots or how to deploy your use case, I will stick around for some minutes. Go ahead, send a message or find me on LinkedIn. Would love to hear from you and help in any way I can. Thank you.
Hey, Renat, greatly appreciate it. Please post, if you can post your contact information if anyone in the audience wants to reach out to you. In the interest of time, sorry, you'll not be able to take questions, but I'm hoping people will follow up with you with questions that they have. And I really appreciate you joining us.
Thank you.
All right. Folks, we're down to the last two presentations. Also very excited about the next one. I saw Thomas present at recently concluded Blockchain Expo that was in Santa Clara. And he spoke about some really cool things like how Nike, for instance, is leveraging NFTs and how what they are doing to further build their brand and better connect with their customers, and similarly other major brands as well. He puts a lot of great content through his social media. So very excited to have Thomas Pan join us today to do his talk on how major brands, how global brands are leveraging the Web3 and Metaverse. So with that, I'd like to turn it over to Thomas for his talk. Thomas, over to you, buddy.
Hello, hello. Can you guys hear and see me okay?
Loud and clear.
Cool. Well, hi, everyone. I will share my screen right now. I have a boring looking presentation, but I promise the contents are probably what matters these days. Can you see this? I think you guys can.
We can, Thomas.
Great. Let me put this in slideshow mode. All right. So we're a little behind. I could definitely do this in 20 minutes. I'll try to go faster. So if you can't keep up, it's me, not you. And also, I will make this presentation available after. Feel free to reach out to me, Ali. We can get that taken care of. All right, brands of Web3, how it impacts the metaverse. Put a lot more than 20 minutes into this presentation, just compiling everything. So packaged up in a nice bow, black and white presentation for y'all. All right, I'm gonna make this the most informative 20 minutes of your day today. I can't guarantee that, but I think so. Let's buckle up. All right, let's find common ground first. I imagine some of you are crypto native or have been in the space for some time. I'm definitely not an OG, will happily admit that. I came into the space more seriously in January 2021, thanks to NBA Top Shot by a company called Dapper Labs as a consumer. And that caught hundreds of thousands of other people, partially by surprise, partially by speculation, partially probably still to a degree staying at home and online due to, COVID and the transitionary period. And that really got a lot of people on chain and exploring different types of products from a consumer standpoint, as well as inspiring a lot of other entrepreneurs and builders, right? So let's find common ground first. NFTs are down, crypto's down in the dumps. It's probably going to go to zero, right? Wink, wink. But regardless, let's start with that common ground. One, it's not about you. It's also not about me, right? If you have children, where are they spending a lot of their time? Probably online, maybe on Roblox, maybe on Minecraft. That's online, maybe not on the blockchain, but it's definitely online. It's digital, virtual. That's just a trend that's moving very much in one direction. I think it's pretty hard to deny that, right? Also, that society, which is more than just us in this conversation, is moving online globally. Whether it's your family, whether it's other people you have a day-to-day conversation with, everything's moving online. Crypto and blockchain technology are here to say, depending on where you are, it might not be as apparent or it might be behind the scenes, but it is here to stay. There are a lot more growing applications of this happening. And with many of the examples, particularly with some very large Fortune 100 brands, they're probably going to show up in different ways and maybe just not in a way that we see today, right? It doesn't have to just look like Coinbase and be a chart. Although very much of that is, just like in the last presentation, a lot of amazing stuff happening in terms of the tokenization of assets, RWAs, et cetera. It hasn't quite had its AI moment though, right? Specifically, there's been a lot of stats around ChatGPT by OpenAI as an example. I believe the number was 1 million users onboarded in 5 days. Threads, the hyped product from Meta, a months ago had 1 million users in a more creative and sort of bootstrapped way from their existing network. But I think that basically happened in a day or two, or even in a matter of hours. And now there are over 100 million users of ChatGPT, not to mention many other AI products. So crypto hasn't quite found those types of moments yet, and they will likely come, and maybe not in as a prominent of a way though, right? So we'll see what exactly that looks like. But what I like to say is onboard and adoption through 1,000 cuts versus death by 1,000 cuts, right? So lots of people are shooting their shot. And enterprises are looking for the next big thing. Have done some thinking about this. I think just logically, if you're a Fortune 100, Fortune 500, Fortune 1000 brand, like what's the next big thing? You've done all the best practices. You probably created those best practices, whether it's engagement, loyalty, B2B sales. What is next? Loyalty is going broader. It's getting more creative. Engagement is going deeper. It's looking at many more steps than, hey, did you just click on something? Did you just purchase something, right? And it's possible Web3 and blockchain can help facilitate some of that. Cool, so who am I? I'm a growth marketing professional, came from quote unquote the Web2 world. So I'm based in the Bay Area, have worked at large startups, one of them being Uber, have worked at smaller startups in fintech, entertainment tech, edutech, et cetera. Currently, I am a growth lead at Pollen Labs, which is a subdivision under the Ethereum Foundation. In short, we're a B2C focused product incubator and accelerator, dog fooding, and also working to build products for the broader sort of Ethereum ecosystem to educate and inform what's going on with the Ethereum Foundation. Consultant and advisor to Web3 companies in the space, and also like Ollie mentioned, I have my own blog. I've been writing it about 16 months now, covering various use cases of Web3, a little bit more on the consumer side, but also growth and marketing related tactics, strategies, and frameworks. So that complements my background, just something I enjoy doing passionately. Published on Tuesdays and Thursdays. After this, I'm actually going to be writing the piece today. It's going to be about friend tech for those of you that are aware of what's going on in the space. Really big product, a lot of hype. We'll see what happens there, but interesting. All right, let's start with Starbucks. Cool. Let's do a quick timeline. In May 2022, Starbucks announced a Web3 initiative. They didn't give much detail, but they, on their official blog, mentioned they are exploring Web3 and NFTs, right? This was over a year ago, right? That's pretty notable and it makes sense. It takes time to build something interesting, especially if you're very large global, sort of a lot of eyes are on you type of brand. September 2022, they announced more details about what that thing is. It's called Starbucks Odyssey, will involve a few different aspects of NFTs, loyalty, creating a new type of experience. December 2022, they launched Starbucks Odyssey in different waves and onboarding. I personally onboarded in January 2023 this year. On a high level, the structure is a different type and an experientially focused loyalty program. So they already have Starbucks Rewards, one of the top loyalty sort of apps, at least in the US, possibly to a degree in the world. And this is focused more on activities, journeys, and stamps, a different type of hierarchy. And also in regards to the rewards, the hierarchy here is based on points, levels, and benefits. They also have recently included community challenges where everyone in the Starbucks Odyssey community hits certain goals and they win together, so to say. And also there is an existing link between the Starbucks Rewards app and the Starbucks Odyssey platform, which is web only for now, but depending on success, I can imagine there's going to be some form of integration and also mobile app development happening there. So let's make this interactive. This is clickable. You guys can still see my screen. All right, so here's an actual pop-up. Right now, we're in the benefit selection period, so you could actually select your perk, right? This is a little different than getting a free coffee or something like that. I am level 3, so I have achieved 8,300 points by purchasing stamps, by completing the journeys and things like that. And I chose to redeem my perk for a Starbucks Odyssey tote, right? And each of these levels has different rewards. So I won't go into detail on that just because we have limited time, but I just wanted to show you what this UI looks like. It's not the most beautiful thing, but at the same time, for where this is in beta, this is somewhat well thought out. And each of these different journeys has the activities nested within it, right? So as an example, I still haven't completed this journey. These are transactionally focused while others are experientially focused. So it's a good mix of this. For this one, the challenge is communally oriented, but also transactionally oriented. You need to visit 3 different participating Starbucks stores and make a purchase at each. And with the communal aspect, the Odyssey Communities challenge was to visit 8,000 or more unique stores by the end of the year. And just for context, 8,000 stores is just about half of all Starbucks locations in the US. That's a lot, right? It's not like this program has 100,000 people participating. So this was actually completed in a week, right? This launched several weeks ago. This is supposed to last potentially, 4, 5, 6 months. This was completed in a week. Shows how interesting people found it. It shows the coordination that happened. And there's a lot of other fun stuff that happened. I wrote about that. You could check that out separately. And here's an example. Whoops, it was completed, but some of these others are more online based, experientially based. So that's a quick sneak peek of what's going on with Starbucks Odyssey. A lot more on that front too. All right. So what's going on here with brands in general, but it's very clear with Starbucks. If you look at a sort of just cross section of what's going on, loyalty and experiences with these types of programs are shifting to a degree from offline to online, especially if it's a retail space, right? There's an opportunity to actually create experiences that are online as well as synchronous. And we're seeing versions of that. It's not literally that everything's happening at the exact same second, but with the example of community challenges, you can see that people are coordinating online and they're taking action offline, right? And for Starbucks as a company, they do have the offline piece as they should because of their core business. They have that pretty down pat. On the asynchronous side, they have that pretty down pat too, right? So they're starting to explore, and other brands too, what it means to do online and synchronous through loyalty and engagement. So something to keep an eye out there. And I think a lot of other brands will be looking at that too. So looking at this from a sort of other point of view, loyalty programs in general, Web2 typically, especially with established best practices today, are transactionally based. Some are experientially based as well. So for example, especially with something like a Nike flagship store, you walk in there, that's an experience, as well as hopefully you spend money too. But for a lot of them, it's just sort of, hey, I need to buy clothes, do the thing, you know, there's a layout, but it's going to get richer. With Web2 and Web3, you really sort of expand the experientially based piece with the capabilities of Web3 while having that transactionally based program integrated and established, right? And what's happening now with the example of community challenges that I pointed out is we're actually expanding both the transactional and the experientially based engagement and loyalty potentially with what's going on here. So we're seeing that evolution. And at the end of the day, this is a business, they need to make more money. And hopefully this is a new initiative, especially as an early mover where things get interesting. So let's go to Nike, another very large brand, a very globally beloved brand. Everyone recognizes that famous check mark. November 2022, they announced dot swoosh. So this is pronounced dot swoosh. There's a dot or a period, then swoosh, all capitalized. I'm not yelling at you with swoosh. That's actually the way they spell it. Again, different generation, different, you know, way to sort of interact with that audience. They announced this new program, right? December 2022, they actually created the dot swoosh ID claim, which is effectively a soul-bound NFT. So it's a digital collectible or identity. In this case, for their ecosystem, you cannot buy, sell, or trade that. That's tied to your account, right? To date, there have been about 350,000 of these claimed and created, right? And that number can grow significantly more. May 2023, they announced the R-Force 1 drop. So this is the first virtual or digital collectible within this dot swoosh ecosystem, a virtual edition of a sneaker based on the Air Force One. So anyone that's familiar with sneakers, I like to call myself a retired baby sneakerhead because I used to be more into that world. This was paying homage to that. A lot of creative stuff I'll show you in a bit. And then they started this string of announcements after that quiet period earlier this year. So June 2023, they had a large announcement. This was literally the day after the R-Force 1 sale concluded. They announced a partnership with EA Sports. And then later that month, they announced a partnership. This is Nike specifically, but also there were dot swoosh components attached to that. They announced a partnership and activation with Fortnite, and Fortnite has been very, very prudent and a great platform for brands to reach a new younger audience, and Nike has seen that as well. July 2023, a new type of utility is emerging. I'll show you guys a little bit what that sort of looks like. They provided 3D files to their R-Force 1 holders. So this effectively allowed anyone to become a creator with high quality assets. Sorry, Luis, I might be boring you, but I'll try to be faster. Just kidding. So what themes are we seeing here? Consumption is moving to a single player game into a multiplayer game, which is co-creation, right? What else? We see virtual items becoming something that is everywhere. Achievements can be something that is actually an item and not just necessarily tied to a platform. And we're seeing interoperability even suggested by these types of announcements, right? The EA Sports announcement was that your dot swoosh assets could actually be used in EA Sports games, right? So this is that quote unquote promise of interoperability that people have been talking about for a long time. And it's a nice big buzzword, but in the coming months, maybe sometime next year, we'll start seeing earlier versions of that happen, hit mass market, right? EA Sports is not a small name. Cool. So let's go into what this platform looks like today. So this is my .swoosh account, tpan.swoosh. I joined in December 2022. You could see that from the R-Force 1 sale that I had some unopened boxes. I'm just keeping that there for safekeeping. Who knows? Maybe they'll be worth nothing. Maybe they'll be worth something. This is very, there's a saying in the sneaker world called rock one, stock one, right? Just you always want to have an extra pair of something just in case maybe it jumps up in value. Maybe you're feeling nostalgic. You want to crack open a new box of that favorite pair of sneakers. And you can also see, I'll click on it so it's bigger. You can start seeing what this virtual item looks like. And it's pretty nice. Granted, it's not a real shoe, not the same exact utility, right? To be very clear. But you can see that they put, okay, let's see. Okay, so you can see that there's some animations with that. And they really, the team spent months to create all these different generative editions and versions of these sneakers, and really creating a canvas that literally isn't possible, right? On a sneaker today. They could paint the pattern, they could print the pattern, but it's not the same as creating a sort of visual effect, right? This is pretty cool for what it is. So what else? One interesting thing to note is this utility tab. So you can really see, like I said, they deliver 3D files to all holders. So I could download these files and actually create on top of that. They encourage that, right? With those R-Force ones for the holders. So I can download that. That's not available for everyone. But what's also very interesting, I already alluded to EA Sports as an example, there's some more stuff going on here. So these tokens, these digital collectibles are becoming basically tickets to exclusive product experiences or access to purchase a product, exclusive experiences, IRL or online, mint passes. Maybe you need to have something or multiple of something in order to get access to mint another thing. And also gaming, like I mentioned earlier. So this is also something to keep an eye out on. Clearly, Nike is sort of pushing the boundaries of what that sort of next generation of engagement and potentially loyalty, as well as monetization could look like. Nothing crazy, not a big line item, if anything, a rounding error, but this R-Force 1 drop generated 2 million in first primary sale revenue. So not nothing, but sort of a rounding error for now. This is in beta, so imagine what this looks like at scale, and if they sort of launch this and expand on this in sort of interesting ways, which I'm sure they have up their sleeve. Cool. All right, let's go on to the next one. McDonald's. So I actually wrote a hypothetical piece about McDonald's because grew up with McDonald's, enjoy McDonald's, still love their chicken nuggets. And it was a little bit more like what if, and this was early in July 2023. Before, there were a couple of interesting things announced by McDonald's. So one, McDonald's Hong Kong, specifically the Hong Kong branch and sort of territory, announced a campaign in partnership with Sandbox, which is a virtual metaverse owned by Animoca Brands. And then actually a week ago, McDonald's Singapore announced the launch of Grimace Digital Collectibles, right? And this was an in-app minting experience, which is still pretty unique today and sort of a sign of what's going to happen in regards to what you can do, where you can do, and how it's integrated into brand and or the sort of larger ecosystem, right? In-app minting isn't really a thing. It definitely happens, but again, this is larger brands that have a reach of billions, if not at least hundreds of millions, right? So what we're seeing with something like McDonald's, right? Because, you know, from a global scale, there are different sort of stages of adoption. For example, easy target is the US. Maybe they're warming up a little bit, but still very unclear from a regulatory standpoint. We're sort of seeing these larger brands explore and give the green light on a local level to a regional level to a potentially maybe one day global level. So clearly with Hong Kong and Singapore, these are specific countries and territories, but they're also based in Asia, which is generally warmer about this industry. And then that sort of moves along. And you can imagine, and I know that, you know, these teams are talking to each other to a degree, right? They operate separately and in silos, but also, you know, the people higher up do have conversations with each other. So something for even them internally to keep an eye on. And I already mentioned this, but minting, storing through wallets, as well as where the activity is happening, has historically and still is happening outside of a specific ecosystem, whether it's on, for an average person, a scary platform that's sort of confusing, you have to click a lot, to in-app, which is much more familiar and seamless, right? Not perfect, but it is much more seamless than in the past so far. So we see some examples of this. This was actually the Grimace Digital Collectible 2000 that were minted, non-transferable in Singapore's McDonald's app. Was free, so that helps from a regulatory standpoint, and there are already perks for holders of this, right? So you can see potentially where this goes. Ali, I see you popping up. Get in on time.
Yes, I think if we wrap up now, that'll be awesome. It's been a phenomenal
Cool, great. Sounds good. All right, in terms of how it impacts the metaverse, already alluded to it, interoperability, the word that has been said many times and for many years, starting to come. Already a few examples of that. Persistence on the blockchain is going to be important, and the shift from digital and virtual being arguably more important, but at minimum as important as physical, as we've seen in some of those examples. Someone in the audience, or I don't know if he's here, but asked about Web3 and AI. Several examples we'll not go over in detail, but if you click on these links, can share the presentation, there's links to each of these sort of things. Dune, an analytics platform, Symbol, also an analytics platform, but focus on LLM to sort of humanize, what's going on in the blockchain, as well as Polygon playing around with some tools. And this is an interesting chart, right? This was actually went viral a couple of weeks ago or last week, but showing how bots are actually quote unquote more effective at proving that they're human than actual humans, right? In terms of accuracy, as well as the time it takes. So does blockchain have a role in that? Maybe, maybe not, but the bots are getting pretty human. So how do you determine proof of humanhood, as a sort of popular term has popped up on that front? So thank you. Feel free to reach out, Twitter, LinkedIn, and also the Substack if you're curious to learn more. And I do have a little bit of an appendix about going deeper into some of these topics I covered. So appreciate you guys listening.
Thomas, that was phenomenal. I loved it. I loved your presentations at Blockchain Expo, and you did great today as well. Really appreciate it. I wish we had more time, but hopefully, we'll have other interactions in the future.
Cool. Thank you.
All right, folks, I think we're down to our last one. It's been a great day, and we've saved the best for the last. At a recent event in San Francisco, Build ETH, the audience was, hovering around Nico like bees around honey. He did a great talk. And then more recently, I heard him speak at an event where he spoke about similar topic, the future of Web3 gaming. So Miko runs, he's a VC, he runs a firm called Gumi Capital Partners. What I learned from him is that in the Web3 space, there's been over $20 billion of investments. Miko's company itself has invested over 100 million, right? So he's very, very qualified to talk about the future of Web3 gaming. I think there's some really, really cool things that are happening in the space. So really look forward to seeing what Miko has to share. So with that, he's going to deliver the final keynote and the wrap up. So over to you, Miko, and thank you so much for joining us.
Hello. Can you hear me all right?
Yes, Miko, we can.
Okay, great. I'm excited to be here. I'm just going to take some initial comments on Web3 and gaming, but before I do so, I just wanted to set a little bit of context. So, we actually were, I think, very, very early investors into OpenSea. We were very early investors into Yield Guild games, right? So one of the things that we've done is we really focus our investment on this idea of emerging novel Nash equilibria. So if you watch this Russell Crowe movie, A Beautiful Mind, you learned a little bit about John Nash, the mathematician, and he created this idea of a Nash equilibrium, which is a game state where the best strategy is for the players to not change their strategy, right? So what happens is that games enter into these states where they just become rigid, right? So everyone starts behaving the same way and it gets stuck, right? So the games get stuck, right? So the thing that's really interesting is, from a venture investor perspective, how do we invest in something like an OpenSea? How do we invest in Yield Guild Games, 1inch, Credo Networks, like a number of unicorns, I think about 8 in our Fund 1, right? So we really think about the future and we think about disruption, right? So we're very interested because obviously disrupting what, right? So the disruption really has to do with this idea of the Nash equilibrium, because what you're disrupting is you're disrupting a game that has become effectively stuck, right? So it's a game that, where everybody kind of is playing the same and nobody's changing, right? So the thing that we find within long-standing Nash equilibria is we find that they become sub-optimized. So I just, and that's what invites disruption, right? Which is that network states become stuck in things that are inefficient and they're not positive, right? So I just wanted to set the stage in order to talk about Web3 gaming, because I think Web3 gaming, it's quite important to understand what is being disrupted, why it's being disrupted, and who's kind of interested in this disruption. So I think the first thing to understand is that, I think that the gamers don't have a problem, right? So I think that's a really important thing. So I think a lot of people talk about Web3 gaming and they're like, oh, why does the gamer care about Web3 gaming? So to be honest, like the gamer doesn't care, right? So what I wanted to characterize for you is the following, right? Which is that what is the difference between Web2 gaming and Web3 gaming? Like why is Web3 gaming different? So to me, the simplest, most succinct way to describe this will be as follows, which is in Web2, the game owns the players. And in Web3, the players own the game, right? So the thing that's very interesting about ownership is that people who've never had ownership don't thirst for ownership. They just have no idea what it's like, right? Now, once given ownership, then people will not surrender that, right? So in a sense, it's this irreversible direction and reorganization of a market. But if the gamers don't care about it, then how does this transition in the Nash equilibrium come to pass? What's the mechanism through which the disruption occurs, right? So there's a lot of really interesting vectors, right? Obviously, there's many, many vectors, right? Because one of the things we do as investors is we try not to invest in linear, obvious, single vector disruption, right? So for example, if you're investing in AI, right? If you're like, oh, AI is big, right? So then the knee-jerk reaction is just to, throw checks into AI companies, right? But we don't look at the world this way. We actually look at what are the forces that can disrupt something that is a Nash equilibria, and we look for Nash equilibria that are very, very poorly assembled, that networks that are stuck in a negative condition, negative state. So I'll tell you in gaming where the problem is. The problem is not with the gamer. The gamer is not like, oh, I wish I had NFTs, right? Like no gamer is saying anything like this, right? The problem in gaming is actually the industry itself. The industry itself is desperately broken and it's stuck in a Nash equilibrium that's exceedingly kind of toxic, right? And one of the things that happens in the game industry is this concept of crunch, right? And crunch is basically the many, many kind of 20-hour workdays that game developers and designers put in right before the game ships, right? So it's really, really this terrible do or die, right? So the thing that I think is fascinating about this tendency in the industry is that the industry easily can accept do or die. They can accept do or die. What they cannot accept is they cannot accept do and die. Right? So people are working very hard to ship games, and that this working hard actually culminates in cancellation, right? And so what happens is that the current structure of financing for the game industry is effectively driven by suits. So the suits show up with an Excel spreadsheet and they say, hey, based on your numbers, you 700 people working on this game, you can all go home because you're all fired. We cancel the game, it's over. nobody wants your game, right? So if you look at the impact of Web3, the thing that becomes interesting is that the people deciding the fate of a game are not necessarily devoid of suits. There will be suits there, right? But I think that the suits are really just purely financial investors, but you're going to see more of people who are the gamers, and the gamers are investing in the game. So what are the kind of vectors and conditions under which this transformation can occur, right? So what are the preconditions? So the first precondition is that you have a suboptimal Nash equilibrium, right? That's a precondition for disruption because it wants to be disrupted. Right? Like the way things are now are unacceptable. So right now they're unacceptable to the people working in the game industry, which is the game. If there's a wonderful book called Blood, Sweat, and Pixels, right? So if you read this book, it documents the history of the game industry, and it does document a lot of winners. So it documents like wonderful games, Stardew Valley, or, all of these kind of famous indie games, hit games, mega games. But the issue there is that even the winners kind of ended up going through hell in order to ship, right? So it's a very, very troubled, difficult industry, right? The thing that I think is brutal are the cancellations, right? So what I really want to say is that it's an industry that wants to change and that it's kind of desperate for change, right? But the question becomes, what are the catalysts that can help with the transformation of this industry? I think one of the catalysts is obviously we're seeing a bull bear cycle within crypto. So crypto as an asset class has a natural bull bear cycle. It has hyper bull, hyper bear, right? And we're seeing things like the emergence of this Bitcoin halving interval. So we're less than 250 days away from the mid-April halving, right? Bitcoin supply halving, it's about every 4 years, right? So the excitement around something like this as a catalyst, obviously we're seeing new entrants like BlackRock who are submitting for a spot ETF on Bitcoin, right? So, obviously, Bitcoin doesn't need all the attention, but rather that most cryptographic assets tend to price correlate to Bitcoin, right? So that means that if we see a Bitcoin blow off top, we'll see an Ethereum blow off top, we'll see other blow off tops, right? So the thing that's interesting generationally is that when you go back to the era of like baby boomers, the baby boomers actually, when they got rich, they would become producers for movies, right? So I think this new younger generation that's going to profit off of this extreme volatility within the crypto market, they will probably produce games, right? So the thing that I think, it may be kicking off a cycle of vitality for this style of game. One of the things that we are seeing is with $7.6 billion of investment in Web3 gaming, including examples like, A16Z invested $40 million into Hilmar's CCP Games, right, which is the creator of EVE Online, right? And Hilmar said something very entertaining. He said, "My job is to make games that are more meaningful than real life." Right. So that's his job. That's how he sees his job. Right. And so when you go back into this idea of what is a metaverse, I think that a metaverse is basically a fictitious land that gets not only more meaning, but then it gets more value than reality itself. So, if you read Herman Narula's book, Virtual Societies, you'll know that he actually thinks that the ancient Egyptians had their own metaverse. Now, he's not some kind of crackpot that thinks UFO aliens gave them Oculus headsets. Like the ancient Egyptians did not have much digital technology, right? But they did have symbols in the form of hieroglyphics, right? So they had language and they had the ability to create a fictitious word. I mean, in our view is that it was fictitious, right? Which is animal head gods, right? But that the animal head god story was so powerful and so valuable that it caused them to do things like erect giant pyramids, right? So were these stories valued highly? Yes, of course they were valued very highly, right? So the idea that humans are able to invent stories, value the stories, and value the content of the stories more than they value even their daily physical experiences, like that's clear, right? So, from this vantage point, we think this is a very important trend. But I talked about not being obvious with respect to things like AI, But like when you think about AI, AI is going to disrupt the apple cart. I think AI will destroy Web 2. I think that it will do so by generating fake humans. So there will be billions of fake humans. I think there will be fake content, right? So deep fake content, right? So there's going to be billions of deep fake contents. And then basically nobody is going to know it, whether anything is real or not on the internet, right? But further, the impact of AI is actually going to create a situation where jobs will be lost en masse. So we're going to see massive scale job loss. But here's a fascinating industry, right? Which is that on the plus side, it will also impact productivity, which is very, very exciting, right? So if you look at what Cathie Woods has done in terms of her analytics on economic development, one of the really fascinating things is that if you can get a 10x multiplier on productivity of individual workers, you can actually afford as an economy to decrease your workforce. So then the question is, what do all the people do? So the thing that becomes really interesting is that the people can actually join the entertainment industry, because the entertainment industry is actually scalable. And what I mean by it's scalable is if you have 4 billion humans sitting around with nothing to do, and yet we have enough robotics and automation to deliver food and deliver energy and deliver housing, deliver everything they need, then what will happen is the entertainment industry will expand by several orders of magnitude, right? And people will not just be in the business of consuming entertainment, but they'll be also in the business of producing entertainment, and people will want more and more entertainment, right? So, I mean, if you study Microsoft, if you look at what Microsoft is doing, well, they're throwing $1 billion into OpenAI, right? And then they're throwing tens of billions of dollars into Activision Blizzard, right? And they're throwing $0 into HoloLens VR headsets, right? So it's very interesting to watch their footwork as a company, because what they seem to believe is they seem to believe in a future that I'm describing, right? Which is they seem to believe in a future where AI has had a smashing impact, right? And when you look at the characters around OpenAI, right, obviously, when you look at, what Sam has been doing with WorldCoin, right? Like WorldCoin is very much this mood of kind of like Sybil resistance, which is fake humans, right? What do you do when all the humans are fake? Well, it's like, okay, we need this, I think Thomas Pan said it nicely, which is proof of humanness, right? So Sybil resistance, documented proof of humanness. I don't think it's going to be these eyeball shaped retina scan type of proofs. I think there'll be wonderful trusted partners like Apple who are doing kind of Face ID type technology with, LiDAR and all, so there's definitely like biometrics is going to be there, but we already have very, very robust and ubiquitous biometrics providers, including on the Android platform. So I would say the following, right, which is that biometrics and proof of humanness will be important. And we are going to see the emergence of some kind of a universal basic income. I think the first privatized version of which we saw with Axie Infinity, and we saw that with Yield Guild Games, which is essentially a labor union for the metaverse that begins to aggregate a universal basic income where the proof of humanness is the ability to play a Pokemon style game, right? Now, is this a sufficient proof? Well, it's possible that you could create a botnet that plays this Pokemon style game, in which case you now have kind of bought to earn, right? So now you have a really clear mechanism for extracting value out of this network, right? So it's not optimal. And I think obviously there's some very weird incentives there. Like if you look at Twitter, it's incentivized botnets, right? If you look at the number of Elon Musk followers that have had 0 posts and 0 followers, it's in the many millions, right? So like Twitter is an incentivized botnet. And I believe that also we will see things like Axie Infinity actually incentivizes a botnet as a function of having user growth, right? So that look at our huge user growth, right? And so the point that I'm trying to make is that, we do need to work on our incentive design in Web3. But what I really just wanted to do is talk about this from the broader view of asset tokenization, right? Which is that in the big picture, asset tokenization and decentralization are the beating heart and the battlefield for Web3, right? Because Web2 providers know they're in trouble. right? Elon Musk doesn't want to run a company called Twitter. He wants to run one called X, right? Zuckerberg doesn't want to run a company called Facebook. He wants to run one called Meta. Dorsey doesn't want to run Twitter. He wants to run Block, right? So everyone's running away. The Web2 people are running away from their creations, right? Web2 is basically over, right? And obviously things like privacy regulation are starting to drive kind of Web3 themes. But Elon Musk is going to integrate some form of payments into X, the everything app. He thinks it's going to be like WhatsApp in China, right? But my point is he doesn't necessarily need blockchain, right? He's got end-to-end encryption on DMs, right? So he's definitely stealing all the ideas from Web3, right? But I think that the core and the last bastion of the ethos of Web3 is decentralized ownership, which is really made possible through tokenization. And it's really made possible through this kind of network of permissionless, decentralized services and decentralized finance, right? With full transparency, automated liquidation, all of the kind of beautiful code is law paradigms that we can all benefit from, right? So I think really like the idea that we can sort of wholesale replace the inefficient, intransparent rails of our global financial system is in some ways a precondition for really capturing the value of these open internet Web3 protocols, right? So I would say that the thing that I think is very exciting about this idea of tokenization is that the next wave really does have to do with regulated DeFi. It has to do with KYC and KYB counterparties. It has to do with real world assets, although I'm cautious about using that term because I believe that real world assets can be split into ultra high quality real world assets, right? Which will be regulated stable coins, government treasuries, right? Regulated government treasuries, right? Because the problem with all real world assets is that they suffer from the Brooklyn Bridge problem, right? Which is that I can sell you the Brooklyn Bridge token, it only costs $1 million. It's a great deal because the Brooklyn Bridge is obviously worth much more, but obviously I don't own the Brooklyn Bridge, right? So that's a problem, right? So it requires an oracle. So it requires an off-chain proof, right? So in essence, the quality of a real world asset is dependent on the quality of the oracle, right? So really we're back outside of code being law because there's no code that can actually look off chain and guarantee that it's faithfully reporting reality, right? So that's a problem, right? So then you're reduced to things like staking and slashing, right? So, but if you go back to law is law, right, then you don't need code is law, and that means regulators, right? So I think that regulators will come in on high quality assets, and that's how we will replace a lot of the financial infrastructure of the planet and use blockchain rails, right? Which is we will have regulation, we will have regulators, we will have clear laws. For example, in Europe, we're going to see MiCA regulation take place. We're going to see leadership from countries like France. We're definitely going to see really interesting kinds of like new experiments in the broader spectrum of real world assets and what I kind of jokingly refer to as fake world assets, right? Which is, and I like to call them fake world assets, the biggest of which is Bitcoin, right? So, so I would say this is that, if you're to kind of have any sort of take homes from this talk, I definitely would want you to contemplate these massive social, economic, and technological disruption factors that are coming, but I think to do so from potentially a hopeful and optimistic lens, right? Because if you really look at this from the perspective of transformation, technology transformation, right? The world that we look for may have massive job disruption through AI, but it will also have massive productivity increases. And I think the critical lever becomes whether we can deploy enough abundant clean energy to basically take care of what looks like a peak of 10 billion humans on the earth, right? Because if we can take care of the people on the earth, then the gaming industry becomes very large, so that, and governments get involved in gaming, right? And entertainment, right? Because governments will need people to be employed, they'll need to collect taxes, they're going to need to, make changes. So this is really more of the optimistic future that I'd like to paint. I know that there's a lot of doom and gloom out there, and but I do think that builders are inherently optimistic people, because otherwise they would just stop building, right? They would just be depressed and do nothing. So, I think for us, we just look for the best builders. We look for them at the earliest stages, and we try to support them through thick and thin. So that's a little bit about myself, vision, a little bit about Web3 gaming in the future, and I think the future of tokenization. So thank you.
Awesome. That was bravo. That was brilliant. Two questions for you, Miko. Two unrelated questions. One, in the play to earn world, does it make sense for games to pay the rewards or the earnings in fiat, or will it be better off, paying in like a crypto? And the second question is the US a saturated market, and the bigger growth going to come from, like, say, India, China, or Nigeria, some of these high population, countries, right? So I was very curious to know your thoughts on those two.
Yeah, absolutely. So the first thing is really about whether play to earn should be kind of compensated or remunerated within the crypto or within fiat currency. So I think one of the things that's very, very important to understand is kind of Gen 1 play to earn. And in fact, the entire paradigm of playing to earn is probably limited because if you're playing to earn, it's effectively the same as DeFi, right? Which is it creates a yield chasing effect, right? And basically games that are fun succumb to games that are more kind of economic, right? And so it really becomes a game of kind of disloyal economy jumping, and basically what happens is it becomes sort of like game pumping and game dumping, right? So people just fly from game to game, they suck out as much value and they dump it for, transfer it into fiat, right? So, I think the intent of playing to earn is maybe not the best intention, right? I think in terms of the international composition, it's pretty well known that among the 3.5 to 3.7 billion global internet gamers, that the majority, 57% actually, are in Asia. So it's definitely a strongly Asian skewed sort of populace within gaming. There's certain very, very extraordinary, strange countries that maybe are not geographically or population particularly big, but have an undue impact on gaming itself. I think in things like intellectual property, I think Japan is very unusual in gaming. Obviously, with big beasts like Nintendo, globally, the sort of largest video game based movie franchise of all time, the Super Mario movie, $1 billion box office, right? Obviously, Nintendo's a giant. Obviously, Sony is a giant, right? So Sony has PlayStation, and they have a lot of really good power coming out of Japan. Obviously, we're seeing things like Breath of the Wild, Zelda, and other tremendous Japan IP franchises, right? Another Asian country that's exceedingly powerful in gaming is Korea, right? Korea probably has the top esports players within most game franchises, the birthplace of effectively esports through game titles like StarCraft and others, where Korea has become a global superpower in esports and in gaming, right? So we definitely think that there's a tremendous kind of power in the East, but we also do feel this, right? Which is that one of the genius things that Axie Infinity did kind of basically ultra rich nations who were basically buying the Axies, right? And then much more developing nations that were mostly playing, right? So it created this scholarship pattern where it connected wealthy countries to countries that are developing, through this scholarship concept, right? So that we think is a really powerful innovation. We think that this does fit the broader pattern of essentially AI being an accelerator for wealth inequality, whereas something like blockchain actually being a counterweight, right? Effectively, that what you have is people who are in the first world kind of buying assets and subsidizing and then enabling the play and earning for people who are in developing geographies, right? So, we definitely see that there are really interesting constructs where developing nations can then be beneficiaries of open source financial infrastructure and the kind of radically reduced cost per transaction, not just from things like regulatory circumvention, which we think will go away, but through things like automation, right? Through things like reliability, and anti-fraud technologies, automated liquidation, transparency, much better analytics of things like liquidity shock. So when you think about stress testing banks, it's going to help to be able to see exactly what the balance sheets are and all of the holdings, right? So if you want to do risk computation, you can do it really beautifully. And if you want to liquidate them, you can do so automatically, right? So those are all superpowers of DeFi, right? So we really feel like these are going to be really important pillars of the future of both finance as well as entertainment.
Amazing. Now, we'll end with this one question. I think you'll like this question. When I heard you talk at House of Web3 Edge and Node, right? You said how the power has shifted from the game publisher to the gamer in this Web3 world, right? And this question, I really like this question from one of the young members in the audience. He asked, what's the challenge now for both the game publishers and the developers in Web3, right?
Yeah, so the thing that I think is really amazing is that the publishers have effectively become sort of the villains of the story, right? Because they've just been the source of a lot of bad acting. And so, when you look at these grand, my son told me a joke, which was, why is EA the worst company in North America, right? So that was the question, right? And the answer was, because Ubisoft is in France, right? That's basically the joke, right? And so these companies have earned a lot of hatred, right? And they do so by effectively sort of betraying gamers. At GamesBeat, there was a executive from Amazon Gaming, and she said this, which I really enjoyed, is she said that intellectual property in gaming is a two-edged sword, right? Because you have to adapt the IP so that new gamers are attracted to come play, but at the same time, you have to respect the super fans, right? You have to respect the IP, right? And the thing that was very shocking is what she was saying. Is she was saying, like, here's a big publisher saying you have to respect the fans, you have to respect the gamers, right? That's never been the case, right? Like, it's always been, let's just make a crappy game, let's just take the IP, slap it on top, and they'll just buy it, right? Because they're stupid, right? It's like, no, like, the gamers are not stupid, right? And basically things like review sites like Metacritic and things like Steam, like the amount of intelligence that goes into game discovery now is really, really good. So like, you can't just pawn off crappy games and slap IP on. Like, people aren't doing that anymore, right? The gamers have respect, the gamers have power, and the gamers, if you disrespect the IP, like, you're going to hear about it. Like the reviews will be written, you're going to get flamed, and like your thing is going to go down the tubes, right? So that the power shift is palpable, and we think that power shift is going to be, a 10 to 100 times stronger when we start to add Web3 elements, right? Because what will happen in Web3 elements is you're going to have crypto super whales that own significant chunks of these Web3 games through, just governance tokens, or through this kind of power of effectively becoming a producer, like a movie producer, right? So they're going to be these kinds of like things as a function of like a crypto blow off top, right? So you're going to have people with just excess wealth that are going to be creating stories, they're going to be creating games, not have the talent themselves to create a game, but they're going to be very strongly influential, and they're going to really be, big. They're going to enjoy, it's going to be a meta game, right? It's going to be a meta game of creating games, and they're going to play a big part both financially and creatively.
Awesome. I've got a lot of positive feedback in comments saying they love your speech, amazing speech. Thank you so much. I want to know, what is your best game, like the game that you enjoy playing the most, if there is one?
Oh, that's amazing.
All the long list.
So there's a number of Web 2 classics that we played in my household over the years. Obviously, Civilization is a mega classic. The Age of Empires series, including Age of Mythology, is a RTS super classic, right? Obviously, massively multiplayer super classic like World of Warcraft, and obviously the predecessors like, EverQuest and, these RuneScape and these types of games. But I would say that like the one that's really, really kind of like I've enjoyed, is one called RimWorld, which is an indie game. It's a survival base builder, and it has what's called an AI storyteller. So, if you're a gamer and you're looking for something really strange and something groundbreaking, like definitely check out RimWorld on Steam. It's a really, really strange game. Basically, the way it works is that all of the characters in the game are AIs that are autonomous and do whatever they want. And what you do as the game player is you just basically set rules and priorities. And then they operate within the rules and priorities and do whatever they want. And what emerges are these just amazing stories, right? So it's an AI-based story generator. Very, very fascinating, and very, very worthwhile in my opinion. But it's very nerdy and it's very indie. So and the graphics are terrible, but it's super entertaining to me. So feel free to check it out.
Love to hear that. Hey, this was a riveting conversation, and thank you for giving us some additional time, to share your wisdom. Really enjoyed having you at our event, and a great way to end. I think the future of Web3 is very, very bright. Our best wishes to you and the rest of your team at Gumi Cryptos Capital. And, I hope to run into you in the future again.
Thank you so much. If you want to follow on Twitter/X, it's Miko Java, MIKOJAVA. And, happy, just feel free to reach out. You can, DMs are open. So thank you very much.
I will definitely do that. My best wishes. All right. Take care. All right, with that, we had a great event. Thank you again, everyone, joining us. 10 sessions, over 14 speakers, some amazing companies, and a great way to end. You guys have been a great audience. We will post the videos on YouTube in a few days, hopefully, so you can watch it. And feel free to reach out to me if, through Eventbrite, or I'll also put my LinkedIn. And thank you for your kind words. Have a great rest of your week. And hopefully you'll join us again at a future edition of TokenExpo. Take care all. Bye-bye.